What is going on, my favorite people? Keith, how are you, my man?
Today's the best day of my life, Ben. How you doing?
Same, man. Today is the best day of my life. I'll throw it back to you so you can intro our awesome guest here and we can get rolling.
We got Jake Claver in the building, folks. How you doing, Jake?
I'm blessed, brother. Appreciate y'all having me.
Of course,
man. Absolutely.
Where should we start with this thing? Because there's so many ways we can take this. People in the chat are excited, and so I'm gonna throw some names up in the chat so we can say hi to everyone. We've got how are you saying the best day of my life? Let's get it. Love it.
Let's get it.
We got Dave. Dave's a mainstay. Good to see ya. Best day ever. Let's go. All right. So Keith, I'll throw it to you, man. Where should we start with Jake?
Jake, prices are down. People are losing their minds. But
oh no, dude.
From what I understand, you have some ideas of how things can continue to shake out from here, right? There's a little bit of a fantastic theory that you've put out called the domino theory. Is that still in play?
Oh, 100%.
So I wanted to start off with starting to just basics of this XRP domino theory and what it really means for XRP holders.
Yeah, so kind of the premise behind this is an amalgamation of context that I've curated for myself for the past 4 or 5 years. I put the domino theory out almost 2 years ago in March of 2024, and since then there's some iterations to that. But in the original one, I talked about we wouldn't have clarity for anything other than XRP. We would have a stablecoin bill that had been passed. We would have ETFs for XRP, which all have come to fruition, and we're still waiting on the Clarity Act here in 2026. And so that puts XRP in a unique position to be able to take significant market share if there is a crisis where liquidity is needed very quickly. It all kind of goes back to really Bretton Woods in 1944 when there was a change in regime and the dollar became the global reserve currency. Since then, we've in 1971, Nixon removed it from the gold standard. August 15th, they closed the gold window temporarily, never reopened it. And since then, we've had floating exchange rates with the US dollar, with all the other currencies pegged to it. So then we had the petrodollar for a long time, which we now see as, going away. If you asked most people, they would tell you that the dollar is no longer going to be the reserve currency, which was not the case 4 or 5 years ago, even slightly after COVID, until we printed all the money and saw the debasement that we've seen. A lot of people thought that the dollar would remain the global reserve currency in perpetuity. Well, the best way to make sure that you maintain status is to disintermediate yourself. And I think that's really what, the US government and other large corporations have done with XRP. But the catalyst that I see imminently on the horizon is a spike in oil. And you might say, well, why does that matter for crypto, right? Like, it's a commodity. You look at gold and silver, they're not correlated, the asset class. Actually, Bitcoin's down while gold and silver have ripped here at the end of 2026. Oil is important because it's the cost of energy. So as energy costs rise in an economy, you see inflation spike. And the way that a central bank can combat that is through raising interest rates. Japan has kept their interest rates at 0 to sometimes negative over the last 30 years. And we've seen a significant rise in their bond yields with inflation, rearing its head in their economy, people not believing that they're going to be able to pay the interest that they have. And so when people sell off bonds, they have to incentivize people to hold them. The interest rates go up. And really now they're kind of backed into a corner where a lot of people have borrowed tens of trillions of dollars over the past 3 decades and deployed that capital outside of Japan. China's really good at this. If you borrow money in China or have assets in China, they want you to invest 90% of that money back into their economy. You can only take 10% out of China. And that's why you see ghost cities in China, right? Like, they'll build these huge cities worth of real estate and then nobody lives in them just because they have to put the money back into their own economy. So, anything constraints that you put around stuff causes issues, but Japan didn't do that. So all of that money that's been borrowed from the Bank of Japan has either been put into US treasuries, basically as a risk-free return, right? Like, you borrow money for 0 and you're making 4 or 5% on it. It's pretty good, especially if you can borrow large amounts of money like pension funds and sovereign wealth funds can. Hedge funds do the same thing. Warren Buffett's borrowed from the Bank of Japan. Everybody and their mom that has had the ability to borrow yen has done it. And again, I'll get to the XRP part. That's the important part, right? So just hang out with me. As their interest rates have gone up, you've got our interest rates coming down. So those yields on treasuries are now paying less. The spread that people have to service that debt is now becoming a problem, and it's getting squeezed. And at some point, you will see them start to de-lever positions in stocks and other areas where they've deployed that capital to rush to repay those loans. We first saw that start to happen in August of 2024, just 5 months after I put out the domino theory, where we saw 13% down in the S&P in one day. We saw 17% down in the Nikkei in a single day. And the Bank of Japan said, hey, well, we're not going to raise interest rates anymore. They had risen, from 25 basis points to 50 basis points just before that. And they said, as long as there's market volatility, we're going to hold here. And they have. They've held for more than a year there at those interest rates. But now their bond yields continue to rise and inflation in their economy continues to rise. If oil were to spike, priced in yen, because of conflicts in the Middle East and the Strait of Hormuz being shut down, that's a strategic choke point for their supply chain. And if there was a delay in shipments of oil, the price would surge, which would cause significant inflation and force the Bank of Japan's hand to raise interest rates. With all of that unwinding, you're going to see markets capitulate. Like we have stocks at an all-time high, you got gold at an all-time high, you've got silver, close to an all-time high. Crypto is down, while everything else has performed almost inversely correlated. While fundamentals for crypto are the highest that they've ever been, we're right on the precipice of the Clarity Act and all of these other things. So when that unwinds, because it will, and it will at scale, it's not going to matter where you have your money. People are going to suck liquidity, tens of trillions of dollars out of the market and rush to repay those loans in yen. You've already seen the Fed buy a bunch of yen and de-risk from the dollar. You've seen Warren Buffett buy a bunch of yen because they both know this is coming and they got to be a lender in that situation because the FX market's going to get slammed when that happens. And the only way to really buffer that and process that real time is with a liquidity buffer like XRP. Japan is a big proponent for XRP. SBI Holdings is a direct, they're on the cap table for R3 and for Ripple. And Yoshitaka Kitao, who's the principal there at SBI, has been advocating for XRP for a long time to implement that for interbank settlement in their economy. So, and they actually run about 10% of the FX market globally there. So when all of that happens, I think that XRP is going to have to be a significantly higher price in order to be able to mitigate that risk and soften that blow. Otherwise, things are going to lock up. I don't know if you are familiar with Jim Rickards or not, but he has been a confidant or an advisor for the U.S. government for decades. And the reason I even came to these conclusions was he did an interview back in 2014 where he talked about this exact scenario playing out and how the dollar would be disintermediated as the global reserve currency. Well, again, like if you wanted to maintain control, you would maybe even orchestrate that yourself so that you had the next piece of the system that you could roll out, right? You had the SEC chair talk about this morning back-end settlement on the stock market with the DTCC and the clearinghouse between brokers and the clearinghouse. And you had the president of NASDAQ talk about that as well. That is the major application I see for XRP is back-end settlement of the stock market. So all this unwinds, you have huge amounts of losses. The only way that people are going to be able to de-risk in that situation is moving to T+0. Right now, markets settle T+1. That's significant improvement from where we were just 5-6 years ago, but it's still not real time. And so if you had significant losses in Bitcoin during this downturn, Bitcoin trades pretty much real time, not quite, but pretty close. And the investment banks would be way underwater and they wouldn't be able to pull from other positions to be able to offset those losses because they're going to be underwater on everything else too. The only way they're going to be able to pull themselves out of the situation is to move to back-end settlement real time on the stock market and be able to de-risk from those positions. And the only way to do that is to have enough liquidity in XRP for R3 Corda and Project Ion that was developed and finalized in 2022 to actually go live and facilitate that. So you might ask, well, how is XRP not going to be affected like the rest of the market here? Well, we're already down to a very low portion of the supply of XRP on exchanges. OTC desk and dark pools have very little left. What's on the exchanges is very little left. And you now have these ETFs that have had significant inflows that have eaten through the majority of that supply that was available for trade. And now it's locked up. in ETFs. You've got, Evernorth launching. You've got other people committing capital for XRP in their treasury strategy. And so all of that combined, you have a supply shortage. You just need a supply shock. And when everybody needs it all at once, there's going to be a lot of demand and not a whole lot of supply. And I think that's going to push the price to somewhere between 3 and 4 digits in a very short period of time.
3 to 4 digits.
Yeah.
So who do you think it is that's like who's buying the XRP in that situation?
Exchanges will need it. If there's implications for Tether and they have problems, Shane Ellis put the theory out about Bitfinex going illiquid and pushing XRP's price to 589 many years ago. Large investment banks and other parties will need it. The ETF inflows, once people figure out that's the thing that's going to be used. You had Mark Yusko over there on it's not Good Morning Crypto anymore. It's Good Evening Crypto with Johnny Nabs. They just interviewed Mark Yusko, and he was like, well, there's this hearsay that, XRP and the XRPL will be the back-end settlement layer for everything. And I don't know if that's going to happen or not, but, if there was an announcement like that, how many people would be clamoring for it all at one time? Right. So I think that this will be a coordinated effort to push the price substantially higher, because that's really the only way it's going to have enough liquidity to be able to solve the issue when it arises, when that crisis happens.
And you feel like this is part of, like people would probably need to have been having this conversation, right? Like this is something that
decades.
Wow. And do you feel like there's any particular like entity or place that this has come from? Like where did XRP come from in your mind?
You could probably take it all the way back to 2004 with Ryan Fruger in Canada. And then there's been, obviously Bitcoin came out in 2009. You had OpenCoin founded shortly after that, and they minted XNS, which is what XRP originally was, before they gifted, 80% of that supply to Ripple. And then they rebranded it to Ripples when they first took over. And then in 2014, the IMF came out with a white paper that talked about an exchange rate peg. And the abbreviation they used for the exchange rate peg was XRP. And shortly after that, Ripple rebranded Ripples to XRP, or the exchange rate peg. So, there's a long list of people that are probably involved with this. And again, if you knew that the dollar was on a path to no longer being the global reserve currency at some point, like you have Triffin's dilemma where you hollow out your manufacturing and you ship all of that overseas and then you export your inflation because you can do that. That's what every single reserve currency has done. And you've seen the pattern, right? Like it's happened 5 or 6 times over the past 500-600 years. Then you know what to expect, and you know when to start working on that to be able to make sure that you're part of the next system, or circumvent yourself, really disintermediate your own currency with the next solution. But you have to have buy-in also. It can't just be one party, because we've seen how that works with the sanctions, right? Like these other countries that want to participate globally, they're not game for these sanctions. Russia's mad. Iran is mad. North Korea also wants to participate, right? And you can blacklist wallet addresses on the XRPL to not take XRP from them, but you can't keep anybody else from transacting on the network. Because the origin account's been black holed for XRP, you can never mint anymore, and nobody can freeze the asset. So it is a true neutral bridge asset that everybody can trust and use. But there's also no clawback. So if you send it to the wrong place, like it's theirs, you can't get it back. Issued assets on the XRPL, you can, they have smart contracts that allow a clawback provision, which banks and institutions need to be able to mint stable coins. You saw Zandbank come out this morning and talk about an AED stable coin there in the UAE. You've got other people that are now launching stable coins alongside Ripple on the XRPL, talking about that this morning. And so if all of these sovereign nations and people that are issuing stable coins had a neutral bridge asset that nobody else could control, that is part of their treasury, but then they could issue the assets that they have full purview of and control of, that gives everybody a level playing field to be able to interact and participate in a global economy, and you get buy-in from all the other people.
So we got some people commenting, and in general, right, I'm sure that every time that you say anything like 3-digit,
Yeah.
4-digit XRP, people are like, what are you talking about? So I wanna look at some of the comments. We have Johannes saying basically like, bro, $100, and then he says $1,000 XRP equals a $57 trillion market cap.
Yep.
That's 2 times US GDP.
Correct.
There isn't enough global liquidity in existence to support that price. The math doesn't add up. And what
Well,
would you say to that?
That's a good point, right? So if you calculate the total market cap of crypto and you're relating that to stocks, you would be absolutely correct. Unfortunately, the circulating supply of XRP is 100 billion. The available supply is much, much lower than that. Well, actually, so the total supply is 100 billion. What's circulating is around 52 billion. And the available supply, I would say, is less than 100 million on exchanges. So you're looking at the total amount of stocks outstanding times the price per share to get the market cap. It's a very simple equation. I actually just wrote a white paper on what I call the liquidity index, which I believe is a much better marker or metric to be able to value cryptocurrencies by.
Did you put this out?
We haven't put it out yet.
Okay.
I finalized it this last weekend.
Gotcha.
But yeah, market cap is great for stocks and shares and companies and valuations on that side. What I would challenge you with is imagine trying to quantify the value of the email protocol. Like imagine you sent $1 every time you sent an email. How much liquidity would have to be in the asset or whatever, on-chain data packet it used to be able to transfer that value to be able to facilitate that at scale if there was a limited supply, right? So it's a very different market dynamic. And today market cap would apply. I will say that is accurate because of the circumstances that exist with exchanges. Again, you're looking at available supply and then the, total price per trade. On the other side of utility, it will have a much different mechanism by which people value this, and it will be substantially higher than the total global GDP for the market cap of the asset. And that's why I think liquidity index is a much better indicator of like what this is as a protocol versus a company.
I love it. I think first off, I really respect also your ability to say, as it is right now, right? The market cap is actually still relevant.
Yes.
Right. Because the asset is not being utilized in the way that we're saying could happen. So I think that's a really important nuance. And it's the thing that we have talked about on the show in the past, because as it stands, right, we do have to continue to look at these things as purely speculative assets.
Yes.
So you also mentioned this 589. And I just wondered if you had an idea of where did that actually come from? Because I noticed you also only follow 589 people on Twitter.
Yeah, so 589 is an interesting number. If you multiply it out, you get 360, which is the full circumference of a circle. If you add it up, you get 22. There's 22 cards in the tarot deck. There's a lot of esoteric and mathematical stuff around 589. You have 589 for the COMEX, which is the rule that they're implementing for a one-to-one backing, along with Basel III. You also had docket 589 for the Epstein documents that have been released. There's just been a lot of interesting circumstances where 589 has been relevant or used, or happens to be the number that things fell on. I don't necessarily believe we live in a matrix, but there's interesting patterns or coincidences that persist across a lot of different things. You can look at the macro and the micro, kind of as above, so below type stuff. Things repeat on both scales, which is really interesting. So just kind of a nod to the laws of the universe, I guess.
Do you think that the price, because there's also like this, I've seen some theories of the price having like a predetermined value. is 589 one of those on the way to a 4-figure? Like,
I
how do you
don't
look
think
at that?
so. I don't think it's a predetermined value. I think it's more of a marker of, again, just times of change, right? Times of significance. Brad Garlinghouse has followed 589 for years. Ripple, I think, follows 985. So, again, I think it's just kind of a nod to the uniqueness of that number and the role that it plays.
Gotcha. So one other challenge that people often bring to the XRP question is, why wouldn't banks just use their own? Like, why wouldn't they come up with their own
They
blockchain?
will. They'll issue their own stablecoin. But so banks don't trust each other after 2008, right? And you also have this Nostro Vostro system that exists today, where there's about $27 trillion locked up globally that just sits there to be able to settle between counterparties. Nostro Vostro means yours and mine in Latin. And so you take some of my money, I park it over here at the bank, and I take some of yours and I park it over here at my bank. And when you send me a payment, we take it out of that. If you could unlock that money for the banks, how much better purpose do you think they could provide for that capital, right? That's why they charge you for wires now, and they really don't even make anything on wires. It's just a hassle, and half the time they call you and tell you, it's a scam, you shouldn't send your money, blah, 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 because they don't want that money to leave their ecosystem. Stable coins for interbank settlement are great, right? Because now you have a unified accounting mechanism across all of your branches and internal systems. You can settle real time between accounts, no problems. But if I'm Citi and you're Bank of America and you tell me you want to send me your stable coin, I don't want your stable coin. I want my stable coin because I'm holding treasuries and I'm earning the yield on the stable coin. So consumers, people think about how they're going to transact with this and not at an institutional level. I do think that stable coins would be available for people. You'll have peer-to-peer payment systems and merchant services, and I think a lot of those probably end up on Hyperledger or Hedera. But for back-end settlement of institutional accounts for enterprises, the XRPL is uniquely positioned to take that market share. And it's a neutral bridge asset that allows them to unlock $27 trillion. And let's say they didn't do that. Let's say they did just roll out the stablecoin narrative that you mentioned. It just exacerbates all of that Nostro Vostro accounts. Now I've got to hold my stablecoin with all of these other counterparties, and they've got to hold theirs. I've got to hold theirs on my books over here so that we can settle between one another. And it just locks up trillions of dollars instead of unlocking value, which is the whole premise behind this technology.
Another thing that people often ask about is why does so Ripple is the company, right, that has continued to kind of distribute this asset as well as support the development of the XRP ledger. A lot of people come in and they're like, look, this company Ripple has a bright future, lots of opportunity there. This XRP thing, I don't know. And the thing that they'll usually say to also hammer this point in is, well, why is Ripple always selling XRP?
It's a good point.
What do you think of that?
Well, so it's kind of a chicken and the egg, right? Like you got to be able to get to market and get things to scale. And you also don't want it to be a security of the company because then there's a counterparty, right? Somebody issued this asset and they seem as though they have control of it. Ripple only runs 3 of the validators that vote on the UNL for the XRPL. There's 35 that actually have to approve new amendments. So they have some say so, but it's decentralized. A lot of people would state that it isn't because they see the amount that's held by Ripple, but it's not staked, right? So they don't have control over the network like somebody that manages Ethereum or some of these other assets that have governance based on the amount that they hold. Now, the valuation of the company versus the asset, right? So we own both. I have equity in Ripple, and then we also have XRP itself. They absolutely do sell XRP every single month onto the market to be able to fund their business and their acquisitions and their growth in order to be able to get additional benefit for the network and the asset itself, because you need distribution, you need adoption, you need gateways, and it's more of a Trojan horse type play, right? So they've integrated with all of these payment providers globally, institutions, enterprises. They're now doing treasury management. They bought a prime broker. They can, create margin against the asset and other tokenized assets. And they have all of these tools because they've, aggregated value in XRP over an extended period of time and be able to sell that onto the market to fund their business and scale this out. That doesn't mean that they're in opposition to the asset. That means they're trying to get distribution for the asset so that it can be used at scale and it benefits them. I mean, imagine they've got about 5 billion XRP on their balance sheet that they use for ODL and other things. And then they've got the other portion of XRP that they have in the escrow. For a long time, they didn't even include the portion that they had in the escrow in the valuation for the business. In 2024, the day that the DTCC went live for T+1, May 28th, I was at Consensus and I listened to Brad Garlinghouse speak on that topic. And that was the first time I ever heard him include the escrow in the valuation for their business. Up to that point, he really hadn't, but I think he knew that they were going to win the lawsuit at that point. So anyway, it's a weird deal, right? People look at that and they say, okay, well, they're suppressing the price. They are. They're holding it down. They're holding it stable, right? So that's the other piece of this. You need a treasury. If you were going to use a network and an asset as a settlement mechanism, it can't be hugely volatile. That is not good for settling value between counterparties. If I send you money and by the time it gets there, it's a different value than when I sent it, not good. So they need a very stable price. In order to be able to facilitate that, you need some type of escrow or something to be able to release enough onto the market to meet demand and hold price stability, which is what they do. And you'll see XRP trend sideways, and that's why people hate it. It just stays sideways for extended periods of time for them to be able to trial and get this to market. So when they're ready and when the world's ready and when they need it, this is going to be, it's trialed, tested, been around 13 years, never been down, only been paused twice. It is the only thing with enough uptime and track record that banks and institutions would ever adopt.
I've got just a couple other things, and then I'm going to step back and let Ben properly participate in the conversation. I'll stop hogging the mic, but Johannes Winter, I get that a low circulating supply creates scarcity, but even then, a $1,000 price still puts the total valuation at $57 trillion. No, not trying to be rude, just understand. And I want to respond to this as well.
Well, and I'll talk to that point again too. So most people, when they look at market cap, they think that that's a total amount of inflow.
Exactly.
That something has to have in order to reach that market cap. It's not the case. It's just the price per total circulating supply of whatever it is. So if people bid the price up and there is a certain amount of supply and a certain amount of demand on the market, the price can be substantially higher than those total inflows, right? Zach talks about the multiplier deal. And that's a real thing, right? Like, a certain amount of inflow on XRP on exchanges actually causes the price to be a multiple of how much that inflow was versus the market cap. And I think that's the hard concept for people. They think, okay, well, like all of the money in all of, twice of reality has to move into this asset. That's not the case. In the stock market, it's different, right? Like, again, you have all of the circulating supply of those shares available for trade at any given time. Now, some of them are locked up in ETFs and other things, but you get a multiple on stocks too, right? Yeah. Versus the income and other stuff.
Exactly. 100%. I mean, this is a big point that Ray Dalio makes when he's talking about the AI bubble. He's like, well, if everyone starts to sell at once, guess what? You're not all going to get all of the value of that company out. That's just not how market cap works. Market cap is a valuation metric. It is not a liquidity metric, which is also, to your point, of that there's a different way of looking at the valuation. So you did exactly what I was going to try to go in about there. The last thing I really wanted to get your thoughts on is Tether, because I've heard you talk about how Tether in this event of the domino theory could potentially depeg or have some issues. Can you talk a little bit about Tether, maybe like their business model, or where you think that there's some opportunities for an event like that to occur?
Well, so I've had some conversations on Twitter over the years. So on Tether's balance sheet, Tether, the company itself, owns other assets, both Bitcoin and gold, a lot of gold at this point that they bought in Q4 of last year. We've never had a full audit of Tether. We don't know exactly what backs all of their one-to-one that they're supposed to be doing. They also aren't compliant with the Genius Act, right? They've got 3 years to figure that out, which is fine. Howard Lutnick has moved on. And so you got Bo Hines that's moved over there, and they have USAT. Like, why would you launch a US compliant stablecoin if you were going to continue to use the old one? Why wouldn't you just make that one compliant?
Exactly.
Right. They are the 16th largest holder for US Treasuries. I think that they got rolled into the US government sometime between 2014 and 2015 as a proxy for the Fed to be able to soak up treasuries that float onto the market from foreign holders. So we've seen huge amounts of treasuries, delevered by China and Russia over the past 4 or 5 years here. You know who the majority buyer of that was? Tether. So, I think they showed up and they were like, hey, look, you can go to jail or you can work with us and we'll help you become, the most profitable company by capita in the world. How's that sound? And we're like, deal. That sounds great. So I think it'll be around. I just, if there is a situation where Bitcoin and gold fall substantially, there wouldn't be enough backing. And if people found that out, very similar to kind of an FTX situation, there'll be a run on it. And then it's just a downward spiral, right? And it continues to put pressure on it. The other thing that could happen that was mentioned by a Ripple developer in a conversation that I had on Twitter was that they could be sanctioned. So the Epstein documents that have come out, kind of tying Epstein to Bitcoin and some other things, there may be, there's another 50% of those documents that's still yet to be released. If there was something that, came out in those documents that was very damning for Tether and its ability to circumvent sanctions or move around other payment networks, it's a great honeypot, by the way, because it's a public blockchain. And if you could figure out who sent the money, it would be really easy to see what was going on for illicit crimes and activity. But I don't know. It's one of the two. I don't know if it'll depeg or get sanctioned, but I think there's absolutely going to be problems with Tether when the reverse carry trade unwinds. And then exchanges will be clamoring for another liquidity option to be able to facilitate trades and, de-risk and do everything else, just like, the Chain Atlas theory talks about.
Understood, man. Thanks for breaking that down. I've got one other thing because someone responded on Twitter yesterday to us having you on, and he had some ideas that he wanted to, challenge on the domino theory.
Okay.
Now, there's one in particular that I think is worth actually talking about, but basically he's saying, how high of the price does oil need to get to for this to be a spike? And what if oil doesn't hit that level? What if Japan has different ways of basically trying to fight inflation? Was another thing.
What?
He said some other form of quantitative easing measures.
Well, it just exacerbates inflation if they add more currency. Yeah. So on the oil spike, you're going to need to see a 20 or 30% move in oil priced in yen to really get them to budge. If it's a gradual thing, it's not going to happen. It needs to be a very prominent move in a short period of time for them to have to react to it.
And then the only thing that I thought was also worth talking about is what if the Clarity Act does pass and then XRP isn't the only asset with clarity?
Yeah, I mean, that's a lot of people have asked that question. It's interesting to me they continue to kick the can on this and they've separated it out from the Genius Act. I was on Capitol Hill advocating for both when the Genius Act got passed, and I got to talk to all the congressmen and the congresswomen there and ask them, what they thought was going to happen. And they said, I think we'll get Genius passed, but Clarity is probably going to be 2026. Funny how that played out. But yeah, to his point, there would be competition for XRP in that scenario, but I would challenge that and say that the amendments that have been proposed on the XRPL and accepted at this point provide the highest level of compliance for other institutions to use it: digital identity, credentials, permission domains, and now we have permission dexes going live here in 8 days. That allows for, I don't want to say siloed ecosystems, but walled gardens to participate on the main net that allowed only people with the credentials that were required to be able to participate or get access to certain ecosystems. And that is what people want, right? That's what the banks want. They don't want everybody to be able to see all of the on-chain provenance of all the transactions that they're doing. They want their cake and they want to eat it too. So there isn't really anything else out there that has digital identity baked in at the same scale for compliance for AML, OFAC, BIS, KYC, KYB, accreditation. You know, if you're a QP or sophisticated investor in other jurisdictions, digital identity on the XRPL is far above and beyond these other ones. And now that you have kind of a zero knowledge proof component to it, I think it's going to be much more widely accepted versus something like a Solana, where they don't really have any private chains or anything. Corda did trial Solana right here recently in the not too distant past. It's also had, you know, a bunch of problems where it's been down. It just hasn't been around as long as the XRPL. And Corda has a lot of the smart contracts to be able to fill those gaps that the XRPL has on the mainnet. We worked with R3 for some other stuff. But yeah, the Corda settler can absolutely use, you know, a number of assets at this point, but its primary settlement mechanism is XRP. Which again, Project Ion on the back end of the stock market was developed specifically for back-end settlement, and that's the first application that the SEC and NASDAQ and the New York Stock Exchange is discussing distributed ledger technology being used in.
What did you think of them bringing up the DTCC in particular, rather, saying that they're going to start tokenizing securities in the second half of this year using the Canton network? Some people are saying that that's like competitive to what Ripple is doing in XRP.
I mean, you could argue that. So they have the multi-purpose token on the XRPL that allows for voting and share rights for a same fungible token. I don't know what issue assets work like on the Canton network, but they seem to be gaining a lot of traction for RWAs. The tokenization and the accounting mechanism for the total outstanding shares versus the settlement mechanism are two different components. Canton's token is really to pay fees on the network. It doesn't settle value. It's for people participating in the ecosystem. Very similar to Quant. And that doesn't mean it won't do well, especially if there's volume and demand for the token to be able to participate and issue stocks on that chain. It just doesn't facilitate the settlement between the clearinghouses and the brokers, which is the role that XRP will play.
Very well. Someone had actually just asked about Quant, so you answered that as well. Ben, I have run my mouth.
You're good, man. You're good. I know many of the people that were here were here for that, so I just figured I'd sit, listen, and enjoy. But Jake, I've got some questions more on like the meme side of things in terms of like the culture, the movement, because XRP certainly has a lot of the things that pique my interest. Yeah. Because I was never a big XRP guy. I'd say my XRP knowledge really came from getting to know Keith a lot more and him educating me on it. But as soon as I started studying the social phenomenon of the XRP movement, I noticed that it really attracted like a very consistent type of person. And so I was wondering, like, when did you find XRP, and have you noticed something similar?
Absolutely. Yeah. So I actually wasn't even in crypto until 2020.
Okay.
Right place, right time, had some cash, did well. And XRP was an allocation that I had. I'd originally invested in 13 different projects, and then I consolidated all of the money that I made in 2022 into XRP, because at that point I felt like, okay, like this is the for sure thing. You would say I'm risky, right? Like a lot of people would say I'm risky for being in the space.
Absolutes a lot, which is definitely the scariest thing, because like people are listening to you, right, all the time. And and that's like the scariest thing, because to bring it back to your like price predictions that you were making before New Year's, I was sending that back to Keith being like, this guy's crazy. I was like,
well, I am. So my definition of crazy is you can see things other people can't. And sometimes that's not a good thing. But you could have called Michael Burry crazy. The banks did. They lent him the money because they were like, yeah, we'll let you bet against the housing market. This is never going to collapse. You're crazy, my man.
Okay, so you're banking on the fact that zoomed out enough, you'll be vindicated with these predictions.
For sure.
So what's that timeline look like then? Like how big of a runway do you get?
Well, I mean, that's up to people, right? I don't get to make that call. I will put my nuts on the line and make statements. My attorneys have told me to refrain from doing so moving forward.
I figured that would be the case.
But like, I'm not going to back down. I have very strong belief in this.
Okay.
And I've had enough validation from the right people that lead me to believe that this is the outcome that will take place. But as far as the community goes, it's definitely a consistent type of person that it attracts. I've found that most people are faith-based that own XRP, which is unique and beautiful, by the way. Most people are well-to-do. They want to take care of their themselves and their family, but anything beyond, what they kind of dream for themselves, they want to give back and do really cool stuff with. I was on Nathan Cashew Nate's podcast, and he asked me a question, and I told him I think the meek will inherit the earth, and I really do believe that. I think that's what this is for XRP. I think it's a wealth transfer where good-hearted people will end up with enough value that they can affect real change for others and do cool stuff.
Okay.
And the demographic, that we work with at Digital Wealth Partners, the services we provide, and at the family office, most of our clients are somewhere between 35 and 80 years old. It's not, we have some that are in their 20s or in their teens that have accumulated some XRP. But the demographic that is, I would call maybe Gen X and boomers, they don't think the banks are going to go away. They're not going to be disintermediated. They don't think that this is just going to be a free DeFi ecosystem, free for all, where people can participate without compliance and oversight. And so XRP being the banker's coin, right? Like, that's appealing to them. It makes sense. It transfers value. It solves a gap in the market, creates a solution where there isn't one today. And they can see how that would actually play out and be used versus some of these other tokens that are like, where does the demand come from, right? The tokenomics on stuff. And you could argue that the tokenomics on XRP are crazy, right? Like 100 billion. Like, why would you need that supply? Well, if you didn't want whatever it was to be an astronomical price for moving value between the economies that exist today and the economies of the future as we scale into AI and, humanoid robots and all this other stuff where GDP becomes uncapped per capita and becomes infinite, like, you need a system and solution to be able to do that. And the only way that you have that is you need something that's going to last thousands of years, and you need something that is dynamic and elastic enough that it can expand as size increases. So anyway, back to the culture, there's been this ethos for a long time that the XRP is going to be a very high price. And I think that has absolutely helped Ripple, right? Because if you had that out in the market and people believed that, they're going to hold on to it. The more that gets taken off the market, the scarcer the supply is that's openly traded, and the higher the price will get pushed, right? Supply and demand dynamics. And so I think it's kind of created this perfect storm for this to actually play out. And, people aren't going to sell until they see the significantly higher prices that many people are hopeful for.
Totally. Yeah. And I appreciate you taking that one. And I do appreciate the conviction that you have in your predictions. And I can totally see how on a long enough time horizon, you could be 100% correct. But with that, why make time-based ones then?
Well, so at Swell in 2026, actually 2025, excuse me, that's the first year that they came out and gave timelines. And it wasn't me that gave timelines. It was the institutions and the banks, right? Like, we had State Street, you had BlackRock, you had Blackstone, you had BNY, you had Fidelity, you had Citi, all talking about the tokenization of these different asset classes in the next 2 years by the end of 2028. So if the utility of this asset is going to be used to settle all of that value, and the real killer app for crypto is payments, and that's kind of the predecessor, you have to have enough liquidity on chain to start moving assets and have a market. That's why none of this has gained traction yet. Like, Securitize has tokenized a bunch of these funds. There's no market. Like, it's a cool deal, and they've got to trial it and get it to market and do all the stuff that they're going to do, but it really doesn't provide additional value today because there's not enough liquidity in those ecosystems for people to transact like there is on the stock market or other markets.
Definitely.
Once you see that liquidity move into those ecosystems through stablecoins, which likely will get issued on the XRPL as XRP being the intermediary asset, then you can start to see those marketplaces open up, and you'll see, all of that adoption for the tokenization of stocks and, other equities, private markets, real estate, all the things that people want to tokenize and think that it's beneficial for. None of that can happen until you have custody, identity, and liquidity on chain for that to actually function in a regulated environment.
So why the New Year's prediction? Like what gave you the conviction that there was going to be this massive price appreciation moment? And also, that's one thing I want to ask you about too, is that there's a few things that I hear like parroted from the community of XRP people. Like and I think they're mostly coming from you. Like they're people watching your stuff and then taking it elsewhere. One of them is like the whole, you don't understand market cap thing. Like we've seen that comment so many times. I'm assuming that's from you. And the other one is post price appreciation. So again, like, why is it all going to happen at once? And why did you think that would be New Year's?
I have some NDAs.
Okay.
And I felt confident that things could play out in that time frame. Also I had a bet at the end of the year.
Yes,
which it was cool. So the whole reason I made that bet on the time frame was the other gentleman that I'd made that bet with had bet other people and taken their XRP in those bets. And my bet to him was, hey, if I'm wrong or you're wrong, either way, the people that you took the XRP from, they get paid back. I've been afforded, a lot of good things in my life. I'm very blessed and grateful for a lot. And I could lose that XRP and be okay. Right. Those other people, some people like grind hard for the amount of XRP that they have. And for them to just lose that to somebody else on a bet on Twitter, I didn't feel good about. So all of those people have been returned their XRP. And so that was the whole premise behind the bet. And I was happy that it went either way because I knew those people were going to get paid back.
Totally.
But that ended up being a really hypey deal. I didn't intend to make it that way when I made the bet, but everybody just kind of ran with it. And he picked the price and the date, and I was like, all right, that's fine. Because I wanted those people to get their money back.
Definitely.
But, I did have a lot of conviction there toward the end of the year that things were going to move geopolitically. And we've already seen those happen. Like we had Venezuela that happened. And now you have all of the elements for the storm to happen there in the Middle East that's going to cause oil to spike when conflict breaks out. And you already had the conflict between Iran and Israel that had almost escalated to the point where they had closed the Strait of Hormuz over the summer. The parliament there in Iran had already voted that they could do that. And so, all of the elements were present for that to happen in a very short period of time. And when it does happen, when all of this rolls out, it's going to be very fast sequence of events that takes place.
So with the time-based stuff though, because you mentioned a very big point that I want to bring up is that you've got your life sorted out, like you're doing incredibly well for yourself, but a lot of people that are watching you, they're not in that situation. You mentioned It's a very specific kind of person. And so when you come to the mic and speak with that level of conviction, they're like, this is going to happen on New Year's. And I'm sure a lot of people made very poor financial decisions in preparation for that event. Because I'm seeing like people on Twitter are very pissed. Like, how do you respond to that?
I try to preface everything and tell people I'm just some crazy guy on the internet, right? Look, I'm not perfect. I'm not Jesus. I don't claim to be.
None of us are. We're all very imperfect.
But at the same time, I tell people what I'm doing.
Got it.
I am not a financial advisor. I don't give financial advice. And that's probably a good time for my disclaimer on here. Anything said here is for entertainment and educational purposes. You should always consult with a real financial advisor before making any financial decisions. If you need a real financial advisor, you can reach out to our firm at Digital Ascension Group or Digital Wealth Partners. Digital Wealth Partners is an SEC registered RIA, and we have 27 advisors there with their Series 65, 7, 63, 66, all the stuff they need to in order to be able to give you like real advice on your crypto. We're the only RIA in the world, and they will tell you something very different than what I tell you or for what I'm doing for myself, right? They would tell me I am being reckless and irresponsible with how I have made my allocation.
Got it.
That's okay. That's my choice, right? And so I try to tell people that when I'm on here and I'm having these conversations. A lot of the time, I think they glance over it for whatever reason.
Well, and then when they hear the number, they think about how that changes their life, right? So they're not listening to anything beyond that. They're thinking, if I buy this much at this price and Jake is right, my life changes like this.
Well, it does and it doesn't, right? So 70% of lottery winners go broke in 3 to 5 years, file bankruptcy. If you don't have the skills, traits, and beliefs to be able to manage that level of wealth, it can become a burden very quickly. If you don't understand taxes, if you don't understand how to structure your estate, if you don't have, somebody around you or advisors to be able to help you in that position, business owners that scale a business over 10, 15, 20 years and exit, they have all of those people because they've had to for their business, right? Lottery winners and people that come into money very quickly don't tend to have that experience, and managing wealth is a skill. It's not, I don't want to say anybody can make a bunch of money, but I've seen a lot of people make a bunch of money that
they weren't ready for.
Right. Right place, right time. Right.
Happens all the time.
And there's nothing wrong with that. But to be able to steward that and preserve it over multiple generations, I mean, that's, you hear the rags to riches story all the time. The first generation makes it, the second generation maintains it, third generation, it's gone. You had that with the Vanderbilts, right? Like they were the wealthiest family in the world at one point, and by the third generation, they had lost all of their money.
Totally.
And then you've got others like the Rockefellers that have persisted for 7 or 8, 9 generations. That
is one thing that I'll give you massive credit for, is that you do always preach the fact that like money only matters if you know what to do with it, essentially. And so you mentioned that you guys have products and services in terms of like how to foster that. We actually had a whole section where Keith was going to ask you wealth building questions. Do you want to pivot to that, Keith?
Well, yeah, I mean, a perfect sort of transition there. I wanted to definitely ask you some more things about some of that. And I saw a video last night where you were talking about that effect, that sudden wealth syndrome kind of thing, where it's like, now what? And something that I think is super relevant to a lot of the people watching is a lot of people who are in XRP, they are preparing for some sort of an event, right? Where you see massive price appreciation. And one of the things that I've struggled with throughout the past 6 years, whatever, of thinking about this is, and people ask me like, do I sell during that event? Like, do I sell when XRP goes up to $10? Do I sell all of it? Do I sell some of it? Right. And I try to tell people to always take an approach of laddering in and out of positions, right? No matter what it is. But the other argument is, right, just like a Bitcoiner who's like on the Bitcoin standard, it's like, I'm never selling my Bitcoin. I'm only going to continue to accumulate more and more and more of it. How do you look at that with no financial advice?
Again, it's always situation dependent and what the outcome you want to be. It also matters how much you have, your age, your obligations, right? And again, that's why we have the financial advisors. I can kind of speak to myself, right? So that's what I normally do. I'm in my mid 30s, have decent income from other sources, don't necessarily need that liquidity. Would it be nice to have? Sure. We've created solutions where you can borrow against it tax-free. You still have to pay the interest on the loans. We're working on some other solutions to be able to hold it inside life insurance, where you could borrow against the cash value of that. That's been a technique that the wealthy have used for over 100 years here in the US to be able to preserve and pass on their wealth without the taxes. We're also creating ways to be able to generate income off of your XRP so that you have a monthly dividend that you're receiving, so that you don't have to liquidate and deal with the tax implications. Because if you do have a low basis and you sell, and we still have capital gains on crypto, I don't know if that's going to be the case or not. I'm hopeful, like everybody else. Trump says no capital gains. That'll incentivize a lot of selling. There will be a lot of selling if that takes place.
True.
But then you have to think about, on the Bitcoiner deal, and if you're a Bitcoin maxi, if you held Bitcoin for 10 years, did really well. If you sold all your Bitcoin at $10 or $100, you probably look back and regret that a little bit, right? I like the ladder in, ladder out strategy, DCA type stuff. I think that makes a sense for a lot of people. What I would challenge people with is know what you're going to do with the money.
Love it.
Because if you're just selling to sell and this is your price target, again, it's like the dog chasing the car. Like you might catch the car, but then you might run yourself over. And if you don't have a plan for that money to reinvest it or use it for something productive, it's probably going to get wasted. Money burns a hole in people's pockets if they don't have a plan for it. And they'll end up buying a bunch of liabilities that they can't afford. And that is how you go bankrupt when you come into a bunch of money, is you buy a bunch of liabilities that cost you money every month and not assets that put money in your pocket every month. So
what would you like? Because there's a lot of people from just all different walks of life that are coming into this space and buying this asset XRP. Let's say it goes to some crazy price and they're like, I definitely want to take some profits if something like that were to happen. What would you recommend as some good ways to put that money into assets versus liabilities?
So I've seen some people say, like, I just want to pull my initial capital back out and let the rest ride on the house. I get that a lot, which that I can understand that, because there's not going to be tax consequences on that, by the way. You're just pulling out your initial investment. The other piece is on the asset side. You know, there's a lot of boring businesses that cash flow really well. Laundromats, you've got car washes, stuff that's recession proof. People are going to use it irrespective of how the economy's doing. And it's also some land, right? Hard assets like land and real estate, you can use the depreciation on to be able to offset the tax implications from the income you're receiving. You could borrow against the asset to put the down payment on that. And then if you know you're going to get 30% IRR, or cash on cash each year from whatever owning that asset was, because it's the debt service, you cover your loan and you live off the extra and then use the depreciation to offset your taxes. If you want the Lambo, go buy a car wash. And then you're cash flowing 5, 10, 15 grand a month, and that covers the lease on your Lambo, right? Most exotic car owners have the car for 2 years.
That's crazy.
They trade it. People that are into that, they want to swap it. They want the new thing. They want to check something else out. And a lot of the time, you know, I would go test drive it a couple times before you make the purchase, especially if you're going to, you know, buy that vehicle. If it's something high end, it can hold its value. I actually saw people in 2020 and 21 that had allocations for Ferrari or Lamborghini, that sold them back to the dealership after owning them for about a week and made $100,000 because there wasn't any on the market and they needed supply, and people were willing to pay a higher premium on that. That's not the case now. Watches have come down a ton. A bunch of things have changed. But yeah, you want to look at scarce things. That's why wealthy people own artwork. It's a one of one, right? It's always going to have value to somebody. And that's why they store a lot of their wealth there. You want to look at other things that cash flow and offer depreciation to be able to offset the income that you're going to be receiving from those things. Businesses are great for that. And yeah, I would look at it, the apartment complex. Let's say you want to buy a really nice house. Okay. You want to buy a $5 or $10 million house. Why don't you go buy a $5 or $10 million apartment complex, or maybe something a little bit more than that first? You know, get that stable, wait for 6 months, service some debt, get a down payment, and then have the cash flow off of the apartment complex to be able to cover your mortgage. And now, like a lot of people that I've found that are extremely wealthy, they always want new money. They already have the money to buy whatever they want, but they're always looking at ways to generate new money to be able to justify a purchase. So how do, like, if I make this purchase, how do I make the money to be able to cover the cost of it? And I think it's just a different paradigm, right? Like, so many people are used to working their W-2 and receiving their income, and that's what they use to pay for their expenses. If you haven't ever read Rich Dad, Poor Dad by Robert Kiyosaki, great book for the cash flow quadrants and how he explains that in there. There's all the resources out there right there for people to figure this out. And I'm self-educated, right? Like, I went to school for finance, but I would say maybe 3% of what I use today came from my education in college. Like, it's very limited.
Got it. Yeah, I was going to ask, like, did you spend time in the wealth management space to learn all of this stuff? Or how did you, like, very few people are using the term IRR as an example.
So, I provide a lot of value on the crypto side, or I try to, right? And that's afforded me the opportunity to work with other high-level professionals in other regards that have 20, 30 years expertise in whatever that is. So the value I trade them is my expertise in crypto, and then they trade me the value and expertise that they have in that domain. And that's how I've aggregated all of this over the past 4 or 5 years. Is I become the crypto guy, and I'm pretty sure, most of the people watching this podcast probably have a pretty good understanding of these markets if they watch you on a regular basis. All you got to do is find somebody else that has domain expertise in a certain area that you want to learn about and say, hey, do you have any interest in this? Strike up a conversation. And then people want to tell you about what they're doing. They're excited about it. They geek out on it. And if you're willing to listen, that's even better, because most of the technical terms and the nuance in all this stuff, people turn off. They just stop listening. So that's kind of the hack that I've used to be able to get all this information. I did a lot of research myself and watched a lot of YouTube videos and other things, but really kind of, working with people that have worked in the industry in whatever regard it is really what's given me the edge to be able to understand kind of a broader landscape of all of this.
So one question that I had when I was hearing you explain, go ahead, Keith.
Just really quickly, because I threw the term out and didn't explain it. Internal rate of return is a method of calculating an investment's return. It's initially referring to the calculation excluding external factors such as the risk-free rate, inflation, and cost of capital or financial risk. This is the definition. It's basically looking at returns while also thinking about the future value and present value of money.
Cool. Appreciate that. Jake, for a lot of these predictions and things that you're forecasting, how much are you considering the potential deflationary impacts that things like AI can have?
Oh, yeah, all the time. So this is going to sound socialist and like dystopian. Okay. I don't mean it that way. I have a very unique perspective on all this. So right now we live in a capitalistic society, again, predicated on humans' ability to generate value. As we move into this new paradigm with AI agents and robotics and all of these things that are going to be creating value on our behalf and at a much more rapid rate and better than we do it, right? Things are going to shift substantially. In the Soviet Union, when it collapsed, they allocated resources flat across everything. They paid everybody the same. It didn't matter, right? When you do that, you have discrepancies in the economy that appear. In a capitalistic society, those discrepancies get filled because people see the opportunity and they arbitrage it, and it'll revert to the mean. If you had, a programmatic AI that had oversight on all the transactions across an economy, and you have this deflationary pressure of all of these technological advancements happening, and by the way, if you knew that was coming, you would front run it with a huge amount of M2 money supply. To be able to mitigate or soften the blow on a deflationary collapse, which I agree with you, I think is coming because of the technological advancements. In this other paradigm, that AI could then allocate resources across an economy to be able to incentivize or disincentivize spending in certain sectors in order to be able to revert that to the mean instead of having the huge volatile swings that we see in capitalism, which is great for making a bunch of money if you're positioned correctly, but you can also lose a lot of money on those volatile swings. Like if you're in crypto, you get that, So with UBI, which again, Elon's talking about UHI, universal high income for everybody. If you make less than $150,000 a year, they would just pay you that much money, right?
That's a great story for when you're gonna go public with the next company, right? Like I'm not listening to anything Elon says right now until that IPO happens for SpaceX, because all he's doing is pumping his bags, man. He's trying to make sure he gets that $1 trillion bonus, man. That's in my opinion.
He'll get there.
He will, for sure. He will, because things like this.
But I do think that there's an outcome where, and people don't want a CBDC, right? Because and they're correct in that they will control how you spend that money. They could put a time frame on it. They will incentivize the velocity of money, which they can't do directly today. They do that through interest rates now, right? So if they lower interest rates, people borrow more money. If they raise interest rates, the economy slows down and inflation cools off. But they don't have a proxy to be able to directly impact how consumers spend that capital. But if you put a time frame on the what was the stimmy check that we got, like if they give you a month to spend it, how much money do you think would have been spent in that month?
All of it,
right? So they could do the same thing with a CBDC or these stable coins. Again, I'm not advocating for this. You would want it to be a good AI that wasn't going to cause problems. But I do think that that's probably part of the system that we move into in the future. And with the economic output that we'll be generating you could actually print money in opposition to that, to deflationary pressure of the, technological advancements, where they could dole that money out and hold price stability, so people could, forecast and, plan.
Totally. No, that makes sense. And I appreciate you touching that. So with XRP, I just wanted to ask you, because you said you found it in 2020. What was the source for you? Like, what was your gateway into XRP?
Oh man, Digital Dave was one of the people that I watched early on. He was in Taiwan and had retired off of crypto, and I was like, all right, well, if you retired off of crypto and moved abroad, like you probably did pretty well.
Yeah.
So I watched a lot of his content. I mean, there's Bearable Bull, in 2020. Shout out to the Bearable Bull.
That's wild, yeah.
DAI and Brad Kimes, digital perspectives. I used to watch those guys all the time when I first got into the space to understand what was going on over here, and a lot of other people too. Again, I was in Theta, I was in Cardano, I was in Chainlink, I was in VeChain. Like I had a bunch of different positions, tokens that I thought would have long-term utility in the space.
Got it.
But yeah, I mean through YouTube primarily, and then I got on Twitter and I found out that there's this whole crypto Twitter thing. Which is wild.
Mm-hmm. So at what point did you start making content about this stuff? Because it seems like your growth was really rapid.
It really wasn't though. So I first started making videos in 2020 on Facebook.
Yeah. Oh wow, okay.
And nobody watched them. Nobody cared. And they were horrible.
We all gotta start somewhere. My old videos are still on the internet and they're horrible.
Yeah. So anyway, I started doing that, and then I did a podcast with another partner, CPA firm that we still work with, and then I kind of branched out on my own and did a few videos, and it really picked up when I met Max Avery, which is my business partner on the mastermind and the other businesses we have. We teamed up in early 23 and started the mastermind and this other stuff, and he helped me professionalize everything. Like I was just living off my cell phone basically. Mm-hmm. I didn't even know what fiber was for internet upload speed. It's taken me 3 hours to edit videos with no video card. Anyway, a lot of rookie mistakes, and so he helped exacerbate things pretty substantially. And then, toward the middle of last year, again, about the time that I made that bet, people latched onto it and kind of rolled with it, and they were touting me. And I was also on Brad Lee's podcast. So
it's a big one.
It just kind of snowballed from there. And it seems like I just kind of burst onto the scene in a short period of time. But like I said, I've been here for 4 or 5 years.
How did that podcast with Bradley come about?
So I joined a mastermind group that's called Board of Advisors. It's not cheap to participate in. Mike Calhoun runs that. Great. Love Mike. He lives out there in Florida. And one of my customers, or one of my clients and good friends, actually, he just called me a while ago. Made that introduction, and he was like, you should meet this guy. He's got a lot of good group people in his community. So I told him no for like a year and a half, because he was in Florida and I'm in Texas, and I'm like, I'm too busy. I can't get over there. And he moves the whole thing to Texas. So now they have quarterly events here in Dallas. And he was like, look, like it's in your hometown. You can't not come. And I'm like, okay, all right. You got me. I'll come. So anyway, I went to that deal, and it was great. They cultivate, a really good community in that mastermind, which is unique. Most of the time, people in masterminds bring in outside speakers. In that mastermind, it's only people that are part of the mastermind that get up there and talk about their experiences. They're business owners that have had a lot of success. And Brad was on the cover of one of the magazines that he did. And so he was nice enough to make an intro to Brad, and then it just kind of rolled from there.
Keith, what do you got next?
I'm kind of just looking at the chat at the moment.
Should we open it up to the chat?
I think it might be time to open it up to the chat.
Because Jake, like I said before, I'm not a huge XRP guy, but I study social phenomena quite a bit, and like it feels like you guys have like a massive cult. Like,
it is a cult.
Yeah, it's like it literally feels like a cult. The first thing I said to Keith is like, this feels like a cult, and this feels like one of their leaders, and like this is crazy.
You're not wrong, dude, and I feel super weird about it all the time. My team will tell me that, and I'm like, I'm aware, I'm self-aware of the situation that's going on. It is, yeah. Well, I mean, when you have strong faith in something, right? People want to believe in something, totally. And especially if it's going to better their life. And what I like about this is it's not malicious. Like, I really do believe everything that I'm saying, and I have my own conviction and investments in the same deal. I've built a whole business around it on the premise that this is going to happen. Like, I don't know how much more I could personally bet on this, right? So, you know, for me, and I really do think it's going to change people's lives substantially. If it was like a Ponzi scheme, or people were being taken advantage of, or like any of that stuff, I don't know. I've tried to do some like B2C sales in my lifetime. I feel super skeezy. Like, when I was out of college, I had a short internship at Northwestern Mutual.
Okay.
And I couldn't do it. Like, I was just like, this is snake oil stuff. Anyway, so I honestly believe everything that I say. I've done the research. I've had the connections and conversations. And that's why I'm up here. If I didn't believe it at the level that I do, I definitely wouldn't make the content about it.
Yeah, no, that definitely makes sense. And there are so many of you guys that if we do get the things to happen that you're predicting, like, obviously, I think price appreciation would follow. I think the numbers you're throwing out there, in my opinion, are crazy. But I do think that we will see some crazy appreciation if things move.
Well, I mean, think about Bitcoin, and obviously the supply is much more finite there. But I would argue that there's a similar supply constriction existing for XRP in the environment that we have now, with all of the other components that I mentioned earlier. And early on, when people said Bitcoin would get to $100 or $1,000 or $10,000,
yeah, no one would have believed.
Everybody scoffed and said that was crazy.
Yeah,
right. So that's the other thing that gives me a lot of faith in this is we've already seen it happen for some of these other ones.
Totally. No, that's a very valid point. Like, if you go back and look at the charts, people, and I recommend you doing that, like, just go look at the lifespan of Bitcoin and how much it's moved, and when it crashed, how many people would have said, you guys were all idiots. Like, you never should have bought this thing. It's never coming back. And then it happened again and again and again. And we're currently in one of those things where everyone thinks that Bitcoin and crypto is dead, but these things turn on a dime. So I really think that's a fair perspective. We got some questions in the chat we'll throw up. People have asked this one question quite a few times, so I want to make sure it gets answered. I'm just trying to find it in the chat. Keith, if you got anything while I look for it, feel free.
I wonder if it's the same one. It was what other stuff you're interested in besides XRP?
Sure.
So I like HBAR, XLM. I don't know what Cardano is going to be used for, but I've met Charles a few times. I actually put out a whole video on the different financial instruments that would be tokenized on chain, and which assets had traction or which networks had traction in each one of those verticals. One that I'm bullish on, that's kind of, this again, not financial advice, don't go buy it, some crazy dude on the internet, do your own research. Hash is the token for provenance. It's only available on Osmosis and on Figure Markets. I had Mike Cagney on my podcast. They're rolling up mortgage-backed securities on that chain to the tune of $750 million a month. It is wild what he's doing on provenance. You got Figure Markets, which also did private equity and real estate early on. They've got a full KYC AML compliance component built out of that network. It's got a lot of traction. And the reason that I kind of circled back to it was when I made that video, I was looking for who had tokenized life insurance, because total insurance globally is like $8.3 trillion with a volume of like $3 to $5 billion daily between premiums and payouts. And Hash was Provenance was the only chain that had tokenized any type of insurance. They had about $250 million worth of insurance tokenized at the time, and I think now they're over $500 million. And we've talked to some other people that have token warrants for Hash and some other things, and it reminds me of XDC when I bought XDC at 0.03 of a penny. I had to go way around my butt. It wasn't listed on any exchanges. I had to buy ETH and send it over to this other wallet and convert it into, the ERC20 token before they migrated to an XRC20 token. Anyway, so just similar aspects, and it's like a penny, 2 pennies, something like that. I think there's, like you said, a lot of room to run. And with some of that stuff that I think they're going to be bringing to the network, it'll drive a lot of demand for the token. Avalanche, we have a lot of clients that hold a diversified portfolio of utility-driven assets. I'm weird in that I hold, all of my stuff in XRP. The majority of our client base is diversified in the space and they probably have some Bitcoin or ETH or Sol or, some of the other larger market cap stuff. My main focus is building out financial products to be able to leverage this stuff in unique ways so that people can maintain long-term exposure while still generating cash flow or getting other benefits aside from just appreciation. Totally so fair. That's what we're looking at for, a lot of the assets that are currently custodied by Anchorage, which is our custodian on the wealth management side.
Sweet. So we had a super chat that we didn't address. So I want to make sure that we can throw it to Jake here. So Rich Mitch asked, heard quite a bit of religious talk, but what happened to Matthew 19:24?
And I'll pull it up real quick because I have this. So Matthew 19:24 is a verse where Jesus states, "It is easier for a camel to go through the eye of a needle than for someone who is rich to enter the kingdom of God."
Well, there's also religious scripture that kind of contradicts that. I don't know if you know who Myron Golden is.
There you go.
Yeah, that's one of Keith's guy.
Highly recommend listen to Myron. He quotes a lot of religious texts in what he does and talks about why you need to become rich in order to be able to fulfill your purpose here on this planet to help other people, right? To he who has, more is given. To he who has not, more is taken away. That's not the exact verse, but if you live in abundance, you attract things into your life that allow you to do greater things, in his name. So I think that there's this weird paradigm, and I even had this when I was younger, until I was around wealthy people. My dad thought you had to be malicious or do something bad in order to gain a lot of money. That's not true. You just have to help a bunch of people and charge a fair price.
Yeah, it's harder to do, but it's definitely possible.
Yeah. Most of the people I know that have made a lot of money have done that. And they're good, cool people. And most of them are religious, by the way. They give all their glory up to God. So, yeah, I don't know. I get that. And if you're in certain ecosystems or churches, you probably have a situation where most people, that's just a paradigm people have for some reason. And I wish they would kind of break that belief, because this is the whole reason. So a lot of what I do is predicated on how my dad felt before he died. He was unhappy with the world. He was like, you need to get off Facebook and you need to call your congressman and we need to change this. And I'm like, Dad, they don't care. They don't care about your Facebook account. You didn't lobby for your congressman. You have no leverage, right? And unfortunately, in the world that we live in, leverage matters. You need resources, you need clout, you need connections. All of that stuff matters if you actually want to affect influence. And money is a big piece of that, right? Money is just value being transferred between two counterparties for receipt of service or product. And again, the more people you help, the more you create, the more value you will receive. The more you give outwardly, the more comes back to you. So it's worked. You can say that it doesn't, but until you've experienced it, it's wild. And you can absolutely manifest stuff. And if you pray on it hard enough, God will show you something in your life that'll allow you to get it. You just got to be looking for it.
I think the energy that you put out into the world really dictates what you can receive back. And if you do have a weird relationship with money, the chances of it coming to you or sticking around is very, very low. And I think we all have these limiting beliefs that we put on ourselves when it comes to money based on wherever we were around. I always recommend people reading the book, The Psychology of Money, because you'll see that a lot of the things that you're saying that you think are fact are just stories that you've told yourself over and over again. Right?
Parents.
Yes, exactly. Right. And I know that I've seen that happen. I've seen extremes all across the board. And if you get to know the person, their standpoint makes a lot of sense. But then it also means that it started somewhere, which means it can change somewhere. Right. I think that's what people don't understand. They're like, okay, this is my relationship with money. It has to be like this forever. I don't fully agree with that. Yeah,
you can change your paradigm at any time.
I agree.
All you have to do is make a decision, right? And And a lot of times people don't even challenge core beliefs that they have because they've been so instilled. You've never even asked yourself the question, why do I believe this?
Yes.
Right. But we don't have much time for introspection.
No,
right.
that's true.
You're working your day-to-day job. You're trying to pay your bills. You got to take care of your kids. Your wife needs some time. You want to hang out with your buddies. Like you're scrolling on TikTok or doing whatever else with your time. Most people don't sit and think about the hard things that they got to deal with in their own life for any period of time because it's so easy to distract yourself.
Most of our problems are honestly from people being so adamant on having concrete perspectives, because we have this thing that I think was either put into us or maybe it is innate, but I have a hard time believing this, where we have such a strong desire to be consistent, oftentimes to our own detriment. Like people would rather consistently be wrong than change their mind and be right.
It is a psychological phenomenon of the consistency bias, right? Like
But where did that start? That's a social thing.
Well, you could say that, but I think it also has to do with survival in a lot of different ways as well, right?
Predictability, you're saying, like to keep you in the tribe?
Yeah.
So consistency bias is a cognitive bias where individuals incorrectly perceive their past attitudes, behaviors, or beliefs as being similar to their current ones. Okay, so it's a kind of slightly different thing. It drives a desire to be consistent, often causing people to stick with initial commitments or decisions, even when new evidence suggests they should change their minds. Now, the biological, potentially evolutionary reasoning for that is the next question that I would have to ask. So you're gonna have to give me a second, but
that's totally fair. But that's a lot of the problem that we have with social media, is because social media is all about time spent on platform. And so how do they make you spend more time on the platform? They make you feel something. And so then they make you attach whatever opinion that you have. And then they give you so much confirming information that you just are so certain that you're certain that it becomes impossible to have a conversation with people. Like as soon as you are certain on anything, I can now predict everything you're going to do. I can push you to do whatever I want because you are so malleable now, because you staked your claim on something that you didn't even actually decide. And so few people realize that. And so like, never have a concrete opinion on anything, really. Like I change my mind all the freaking time, and that's totally okay.
Well, people are afraid to fail too. Like it's instilled in you in school, right? Like failing is bad in school, but failing is part of life, and you should like if you're not failing, you're not stretching, you're not learning.
Totally true.
And I think a lot of people get comfortable in their box and they stay in their lane. And look, I'm not here to say anything's right or wrong, right? But if you want to live your life to the fullest, I would argue that you're going to have to endure a lot of pain and suffering and failure. I haven't met anybody that I know that is what I would consider extremely successful that hasn't been through hell and back multiple times on different situations in order to be able to get where they were. And they have so much wisdom from that also.
Yes. I found a direct correlation to the amount of negative things someone has been through to the quality of person that they are, like typically, right? And so when you reframe how, and this is an Alex Hormozy thing, so I'll give him full credit. When you reframe it to this bad thing isn't happening to you, it's happening for you, right? Yeah. Where you are now given the opportunity. Because if you think about it, if you wanted to be this amazing person, how could you become that person without the opportunities that taught you those lessons? Because it's a lot like when you're trying to give someone information, if they're not vibrating at the frequency to receive it, it's not even heard. It goes right over their head. And so I love that you're saying that. And I'm still trying to find this one comment. Keith, if you found your thing, go for it.
Well, yeah. So just to update on the consistency bias, I saw some study that pointed out that the bias exists across all cultural backgrounds, social environments, and is deeply rooted within human cognitive architecture. And one of the evolutionary perspectives that I saw was that the bias likely developed because of consistent individuals being perceived as more reliable, trustworthy, and stable in social groups, enhancing reputation and survival.
So what was a pro before in a different system can be a massive con, right? So like go ahead, Keith. Looks like you had something.
Well, it works. It still is a pro to people who want to be around other people like that, right? I mean, it's still there, right? It's still 100% there that it allows you to be comfortable. But what is that comfort doing for you is the question.
You have to have biases and discernment in order to be able to make decisions, right? And there's a lot of people that I've seen that end up in paralysis by analysis. They continue to research and never actually take action or execute on anything. Whereas they would probably do better just taking action and iterating on that versus, sitting and twiddling their thumbs trying to figure out what's the best move to make first.
Sorry, go ahead, Keith. Or Jake?
And then on like the other side of it, you talked about the AI and the progression of technology here. If you're stuck in your ways, you're going to be left so far behind.
Yeah, you're done.
If you're not able to adapt and change with the technological advancements that are coming, you like my mother-in-law, love her to death. She still has a hard time with the cell phone, like using GPS. And I know other people like that too. But my son, like, he's super good with pretty much anything. He's already learned it, right? iPad and all the other things. So I guess it kind of matters like what you grow up on and around. But if you're not, again, constantly stretching yourself and using new tools and technology, the pace at which things are going to iterate from here is you're going to be left without a job or value. It's going to be hard.
Yeah, I completely agree. And I think that a lot of people are kind of armchair quarterbacks where they think they understand something because they have access to it. So like I've been running a social media agency for nearly a decade, and I can't tell you how many social media experts I've come across who have never posted a video. Like the amount of people that have given me advice on how to do my job is insane, right? Because people really misconstrue like having used something and knowing how to use something. They're like completely different things, and you really don't find that unless you get your hands on it. I keep losing the chat. Oh, there it is. There it is. I found it. Now I can ask him. So ask Jake, please explain the thermodynamic impossibility and how it will affect XRP.
Keith, you want to pull that one up?
Yeah,
I've never even heard that term before.
They just kept asking it, so I was like, okay, I'll throw him a bone.
Yeah, I figured it was like something that I just didn't know.
Thermodynamic impossibility.
So I'm seeing something here.
Learn something new every day, and that's why I love coming on here, because there's always people that have different perspectives and stuff.
Absolutely, yeah, 100%. And we got another super chat. So I want to. JJJ said the devil mouthpiece is always using scripture like that just to keep people bound. Meanwhile, God always makes his people prosper to keep people. No.
So I'll come back to that thermodynamic impossibility thing, but although I think maybe it was a joke or something, I don't know.
Oh, okay.
They just asked it so many times.
Like Winker fluid or what? The beam stretcher? What is this right now?
Yeah, I'm not sure.
If you're still here, they asked it like 5 times, so I was like, let's see it.
Yeah, definitely feel free to follow up. You know, I think that super chat thing right there was an interesting thought, because, well, one of the things that I also wanted to point out is that there's been research done around this conversation of which different religions kind of prosper more. Yeah. And without calling specific religions or sects out, it's like there are studies that show that people who have these beliefs from their religion around making money being bad typically don't prosper as much. And the ones who are told that it's good and it's a way to provide blessings to the world and to help other people, they typically tend to do better in that regard. So, you know, obviously it always comes back down to what are your actual values as well. Because being rich or maybe helping other people through money could be something that could be seen as not the right thing for some people. Mm-hmm. But I did want to point out,
just want to provide a service at the soup kitchen or do other things for other people or provide labor, right? There's nothing. So there's 4 types of leverage. Okay. You have community, or like employees, other people that work for you. You have code, which is, you know, you type it one time, you create something, it's become scalable. SaaS has become a huge industry because you create one piece of code and you got to iterate on it a little bit, but at scale, the more people you get to use that software, it becomes really lucrative. You have capital, right? That's another form of leverage that you can use in society to be able to provide benefit for other people, invest in things, compound your returns. Community, capital, code, and what's the other one? Capital and community. Oh, content. That's the easy one. Yeah. So like you talked about being on the social media side, Ben, like you create one video and you have all of that leverage, like thousands of people could watch that one video. And that can be done inside your business also by training your employees. You shoot yourself, you know, doing a task one time in the way that you want it done, and you can distribute that to everybody. Any way you want to create value in society is going to require some type of leverage at scale. You can only do so much as a single person. And so it depends on how much good you want to do, right? And what you're called to do on which one of those things that you might use in order to be able to reach, you know, however many people you're trying to help.
Totally. 100%. Keith, where should we take it next?
No, I saw something about causation and correlation on the point that I was making, and I definitely understand what you're saying. I'm definitely not saying that there is causation, right? But there is data that would say that
Correlated.
that there's correlation. Okay, so
Yeah.
thank you for pointing that
I
out.
would say it's causation.
Jake is putting his foot down now. He's standing on business on that. Because there's also just so much anecdotal things that it sounds like you've experienced in your life, right?
Yes.
Around some of that as well.
Yeah, like I said, the majority of the people that I know that have done exceptionally well. What's the other guy that goes around and interviews all the billionaires and millionaires? I'm sure you've seen him on social media.
There's the Hard Knocks guys.
Yeah, like how many people has he talked to that are religious, right? That have done exceptionally well. I would say it's probably like 80% of the people he interviews. So again, just it's a paradigm that's kind of been passed down, and I had to break through that when I really didn't like. I felt a big. And this sounds horrible, but I felt a big weight lifted off me when my father passed. Like, because I would always think through the lens of like, what's he going to think about this, or when I have that conversation, how am I going to navigate it? And when he passed, I didn't have to do that anymore, and I got to make my own calls and decisions. And I didn't even realize that until it happened, right? Like, again, that these introspective self beliefs and like the impact that other people have on you until sometimes until it's gone, you don't even realize that it was there.
Completely. Keith, did you have any more questions, or do you want to go through the news with Jake if he has time? Do you have a hard out, Jake?
Actually, I'm 2 minutes over when I need to jump.
Okay, then
Yep.
well, Jake's stuff is linked down below. So his YouTube channel and his Twitter are linked down below. They're the first links down below. So if you've enjoyed the conversation, go show Jake some love on his channel and over on Twitter. And we appreciate you coming on, man.
Yeah, dude, this was awesome. Thanks for the time and the great questions. Hopefully it was valuable for the viewers out there.
Absolutely. So that's the channel right there. Links are down below, and Twitter's there as well too. He's very active on Twitter. So if you want consistent stuff, I'd recommend both, but Twitter is very active.
Yeah.
Thanks for doing this, man. We appreciate it.
Absolutely, dude. Appreciate y'all having me.
Appreciate it, Jake.
Cool.
Y'all have a good one. Thanks.
Have a great day,
man.
Cheers. Bye-bye. All right, chat. How are we?
I'm small. Oh, no, I'm not small anymore.
Yeah. What's going on, people?
What's up, chat? We got some debriefing. We'll do some news. We'll talk a little bit of memes.
Yeah, and I think a lot of the people who are angry about XRP and the creators in the space who have been saying price predictions and all that stuff, like it's inevitable. If people lose money, like anger follows suit, right? So I get the perspectives. What were you gonna say?
Well, it's also just tough now because not only did the price not go up, but it's gone drastically down.
Yeah.
So there are definitely a lot of reasons why people are upset in general. But that was awesome, and I'm glad that we got to talk about some of the other things as well, because there's just so much to always take away from people. And he even mentioned this himself too. It's like no matter where you sit as far as your relationship to someone's ideas or some of their ideas of who you think that they are, there's always going to be so many things for you to learn and take away and grow from. So I love that about everyone here as well. It's usually not, oh, he made a price prediction that didn't go well, and so therefore I have nothing to hear from him.
Yes.
Right? Like, I don't think that's a very intelligent way of going about life.
Yeah. No. And
pleasant way. Even
definitely. And I'm sure he'll probably stop doing the price predictions at some point because
his lawyers told him to stop.
Yeah, it's a no-win thing, man. Like that's why when we were talking, and I wanted to say it directly to him that I was sending it to you on like New Year's, being like, unless this happens, this guy's gonna get a lot of hate, and that's what started. Yeah, like I think that's a very good point, Keith. Is the fact that like even if that makes you angry or whatever, if you just stop listening because of that, then you could be missing out on stuff for you, like yourself personally.
Yeah, man, 100%. Looking at the chat a little bit, but also wanting to move into some of this news. What do you think?
Yeah, go for it. Let's run through it.
Let's do it because we got a lot. We got a lot today. It's been a huge weekend. So much stuff around prediction markets. Okay, and so last night, or not last night, the other day, A man bet $50,000 that someone would run onto the field at the Super Bowl, then did it himself, cashed out $374,000 and paid a $1,000 fine. And as this happened, because they didn't put him on the screen, but I heard that they were doing it. So I was like, the thing is, I was talking to my family and I was like, there's these prediction markets now. So like there's pretty much always going to be someone that's going to streak at the Super Bowl, like every single time.
Yeah.
But anyways, what are your thoughts on that happening?
I think prediction markets are horrible. Like I think that it was a way for other smart people to convince people who aren't paying as much attention to allow gambling to enter every chat. Is my 2 cents.
Mm-hmm.
And so because they do, to quote the guy who's going ham in the chat, like word salad is very much a big thing for people on like when they talk about prediction markets. Like they always talk about how important it is for all these things. And it's like maybe in your area of the world, but the people most impacted by gambling, it's not them, right? Like it's not these super rich people. It's people who can barely afford groceries and their life is getting ruined by these gambling things. And now it's just going to open up more and more people to that. Whereas before it was pretty well separated to people that liked gambling games and maybe sports. But now, like we talked about, like the geopolitical interested person can now make crazy bets. Like that's insane.
Yeah, it's dangerous without a doubt. And then we're seeing that I saw a tweet about jump trading potentially coming in to become a liquidity provider for Polymarket or one of the other large, Kalshi is what it was. And so you're about to get institutions starting to provide liquidity for these prediction markets. And
is that your tweet that you were talking about last night?
Yes.
Why don't you run through that? Because that looked really good.
Sure. So essentially, there was this tweet that Zero Hedge, I believe, put out saying that there's a chance that not only would jump trading invest into, or excuse me, not only would they start providing liquidity to Kalshi, but also potentially would get ownership stake for providing liquidity. So there's kind of just some things to think about when you have that kind of a situation. And I'll pull up the full tweet so that I can go over it quickly with you. But essentially, in the world of investing on your regular stock exchange, you've got two major regulators in the financial world. You've got the Securities and Exchange Commission, and you have the Commodities Futures Trading Commission. Securities, obviously, SEC is obviously over the securities industry, and that's probably the most highly regulated because it's the most consumer facing, right? When it comes to the CFTC and commodities and futures trading, like you and I aren't typically trading around with futures contracts or hedging our meat supply, right, for the summer. But there are larger institutions that are playing a very big game in that space because they're basically offsetting some of the positions that they have in, for instance, the options market. So point being, the CFTC is the one that's over these prediction markets. But the CFTC isn't really fully set up to really think about the average end user consumer, right? And when it comes to certain financial transactions, and that's my interpretation. There might be other ways of looking at that. But anyways, the tweet that I saw was jump trading is set to gain small stakes in Kalshi and Polymarket in exchange for providing liquidity to the prediction market platforms. Now, in the SEC and the CFTC in general, there are some regulations around having the actual liquidity provider also owning the exchange or the trading venue through which the trades are actually taking place. Because the thing is if Citadel, for instance, back in the days of the Robinhood phenomenon, if Citadel owned Robinhood, right, and they're the ones on the platform actually making the bets against everyone on the platform, well, they might have an unfair asymmetry when they're making bets essentially against the other users on the platform. Like it's also the same thing as the exchange, right? Can't trade against its consumers the same way. It's not supposed to, right? Yeah. So anyways, so this is kind of what I break down throughout this series of tweets. It's like, well, this sounds like a great deal for Jump, who's going to get access to equity in the companies and also have potentially, access to data on what all of these traders are doing on that platform. But it also sounds like the perfect opportunity for these prediction market makers, for people using these prediction markets to get wrecked, right? If a liquidity provider owns equity in the exchange or the venue where they're providing liquidity, then there are several opportunities for blatant conflicts of interest, market manipulation, and just a lack of transparency about how this relationship fully works. And I go through and I break down essentially what I kind of just went over. If I am a market maker and I know that this many traders on the platform, right, are placing this exact trade at this time, then there's a lot of different things that I can do to benefit from that. Okay. There's also different just like weird kickback situations, or I could potentially widen the spreads on something that shouldn't have wider spreads, meaning that I'm making money on either side of the trade,
Yes.
right? So in that case, I want maybe as much of a spread as possible, because the higher the spread, the higher my income is going to be, which in that works through markets in general. But these markets are not super liquid, for one. So there's a huge opportunity to create a lot of market manipulation at the moment. And do the rules that the CFTC has around basically this type of behavior being unethical fully cover all of the things that are happening in these platforms. Now, that's just something that I thought was worth talking about.
No, I think that's awesome, dude. And so definitely go follow Keith on Twitter if you're not already. It's linked down below in the description, so definitely go check that out. But someone also here, I want to touch on this. So Drink Water 9891. I just want to make some money. It's so painful holding on to coins, but they keep going down. I buy more when I can, but I hope I don't die before it goes back up. So I also hope that doesn't happen. But if you're in a volatile asset, a lot of the cost that you're paying is the emotional cost of weathering the storms. Right? Like that's really like when a lot of people who end up making it in money, it's because they had the discipline to understand that markets move, much like the other person said, like we don't control these markets, you're along for the ride. And so a lot of people sell at the inopportune times. And so I know a lot of people who like claim that they held Bitcoin at certain times and then sold it at inopportune times. And now it's like, did it change their life at all? No, not really, but it could have. Right. And so any asset class that you touch, you've talked about before in more technical terms, in terms of like the risk, in terms of what that dictates, in terms of the potential upside and stuff. But what was the formula that you shared?
Sharp ratio.
Yes.
How much volatility are you having to endure for the gains that you're getting?
Yes, 100%. And with crypto, that's off the charts, man. Like the risk here. Go ahead.
The risk is, but the Sharp ratio is actually even better than the typical investment, because you're getting rewarded for the volatility. But yes. Yes. Great perspective.
But what I meant is like the psychological impact of it, right? Because the drops can't really happen everywhere else because there is a floor set. Like barring a black swan event, there's people who have too much at stake that are maintaining the price. Like I'll give the example of the Canadian housing market. The only reason this thing isn't in the shitter is because our entire economy relies on it being a certain level, right? So when you reach there, like the degree of risk diminishes greatly, but so too does the potential upside. Whereas crypto, the upside is unbounded, right? Because we're still shaping what these things even mean. So yeah, it's definitely lonely, but the whole reason we started this show, Drink Water, is because of that. So go ahead, Keith. You look like you got a point.
Yeah, no, I mean, it's just everything that you said is right on. It's like this idea of we're in a space where things are completely undefined, and the technology being useful to us is something that if we
you have to have huge nuts. Yeah, just picture the meme from South Park of the dad walking his
with the wheelbarrow.
Yeah.
Exactly. So because these things are undefined, I mean, like Jake pointed out, imagine we have a way to value a packet over the internet being sent, or an email. What's the value of email?
Yeah.
And then there's also from Bitcoin, if we want to say it's money, right? Just mental exercise. Any amount of fiat money printing, right, is going to lead to more value being for the places where there is a limited amount or a limited space for that money or value to be absorbed by, right? So 21 million Bitcoin, just as an example, okay, chill out. 21 million Bitcoin, infinite amount of money printing. So not only is there like a theoretical, because this technology is new, infinite level to which these things can go up from, but there's also just a practical nature of we're dealing with infinite money printing. So when there's just 21 million Bitcoin or whatever your favorite crypto asset is, then it's literally infinite potential for what that's going to look like in terms of dollars.
And how many more people are going to have to wake up to that reality day over day, right? And then start making decisions that they would have never touched before, right? And so how we connect to this is that someone said, do you guys talk to your inner circle with money, about money? Like, I'm assuming friends, family, etc. I don't do it with anyone unless they're incredibly open-minded, because I already know that they've been fed some sort of opinion and they're going to stick to that. There's nothing that I could say or do that would change that. So I'm wasting my own time. How about you, Keith?
Yeah, I remember getting to a point where I was like, oh, I'm never talking about this with anybody.
It'll flip though.
Yeah, yeah. Well, because the thing is though is that for those people, I don't want those people to know that I'm aware or even in it because that might cause jealousy and other issues once they understand,
Totally.
right? So it's kind of almost just like a risk thing of like, well, actually, nope, I don't know anything about that.
Hmm.
Uh, don't get mad at me when you know prices are it's $1 million for a Bitcoin, and you're like, well, I don't have any Bitcoin. This guy does. And then people not knowing that like you coming after me isn't going to help you get it. You know what I mean? Like, so it's just like so many different
True.
things.
That's a very good point. Yeah, man. I typically just point them in direction of channels that I like. I'll say like start here, and then I'll maybe give them like a few. Watch out for this crap, right? Like if you were to just throw someone into crypto Twitter, it's also a big thing that everyone doesn't realize about crypto because everyone's always like, oh, we can't market. It's like, why? How could you, bro? Like the people who are currently marketing are all fighting over people that are already in existing cults. And if you're coming out and you're new to this, it's a minefield of horse shit. Like you literally, like, even when I send places to go, I'm like, go here. He's smaller. He won't be as bullshit, but he might be sometimes. Like, still be wary of him. Do you know what I'm saying?
Right,
If you throw
right.
them to the big pages, they're constantly playing this game of bullshit clicks, right?
Yeah.
Like how often do we hear? Actually, I'm not going to say it because I want our advertisement to hit really hard. So I'm not gonna. I'll keep it safe. But that just happens so frequently, right? And so I think that realistically, why this show will eventually explode is because there is not an existing on-ramp for non-crypto people. It doesn't exist.
Hmm.
And we are that. Like, and so all you guys here, your friends will soon be asking you questions. And so I think that's really good why this topic was brought up, because when you're new to this, you'll want to tell everyone, and it's not a good idea.
Yeah, man. It's such a journey, you know, and now it's to the point to where, yeah, like people literally are having to wake up to the fact that the biggest debate right now, the things that are going to change the let me back up. The things that all of Congress is coming together for right now, which actually leads me into my news for the day,
Let's go.
is talking about market infrastructure and stable coins and like how that's going to change the financial system, right? This is the argument in the conversation that the United States government is happening right now. So the White House is having a second meeting today to talk about this stablecoin situation and the Clarity Act for the banks and the crypto people to get along about that. So point was, we're at that point where this is the number one thing, right, that people are talking about. And then there was a funny clip from Scott Bessent, basically coming directly at Brian Armstrong that I wanted to share with everyone on this topic. So here we go.
Quick on this crypto legislation that seems to be hung up in the Senate. Secretary, do you expect that the Clarity Act will in fact come back for a markup? And why are we having a debate about bank margins? Where do you stand on this? Do you think crypto platforms should be able to pay rewards, pay customers for moving stablecoin or money out of traditional bank deposit accounts and keep them on crypto platforms? Where are you on that issue?
Again, Maria, I think what we're seeing in the crypto market over the past few months means more than ever that the U.S. we need market structure, we need clarity, and we need to get this across the line this spring. We got a few recalcitrant actors who said, well, it'd be better to have no legislation than the legislation we don't want. And I think both on the banks, the other crypto firms are united against them. So we need to get this across the line. The U.S., under President Trump's leadership, the U.S. is becoming the crypto capital of the world with our best practices, best regulation. And for crypto to remain a viable digital asset and move forward, we need to get this Clarity Act done.
So you think it'll come back fairly soon then?
I'm optimistic, and there's bipartisan support here.
So basically, he just made a mention on how someone out there was talking about how they'd rather have no bill than a bill, and I believe that was Coinbase's Brian Armstrong who said that. But it's moving forward, right? This is the top conversation in Washington at the moment. Anything you wanted to say, Ben?
So some chats that I think are worth discussing. So the Matthew said something incredibly funny where he's like, the man looks like he automatically disagrees with whatever you say. I'm like, that's pretty accurate. He does look like he's just going to tell you why you're wrong. And then, so that's awesome. And then I had one other thing that I was trying to add on here, but I think I lost it. So someone was some people who are like Jake diehards are like, why are you trying to use his face for clicks? It's like, he was in here for an hour and a half, guys. Come on, like have some sort of critical thinking skills. Scroll back, he's there.
That's
crazy. And they're like video reported.
Oh my goodness. Like,
people are insane, bro. The impulsive nature of people on the internet is another massive problem. But yeah, I lost it. So go ahead, Keith.
Well, I'll move forward. This is a big topic here. You sure you want me to move forward? Oh my goodness.
One other point that I was going to say was that this person saying like, I'm having more and more people starting asking me about crypto, and this legislation piece, I honestly think that they couldn't have put it right into law because they need to get more people asking questions. And so it has to be talked about on the mainstream news a lot.
I mean,
like it takes people hearing things so many times, right? Yeah. Like, because now they're getting so much more airtime, right? Where now more people can get like kind of positioned and curious, where now every day this happens, more and more people are being like, when the event happens, they would participate.
That's right? True. That's super true. I think that leads us right into the next topic.
Let's go.
Where we saw yesterday that Mr. Beast essentially just invested into a fintech company. They've said he bought a bank, but it's a fintech company called Step. Did you see this, Ben?
Yeah, of course I saw this. I was all over this.
Okay, because Ben, you brought up the fact that BitMine just invested into Beast Industries. Obviously, a big part of this is trying to bring consumers into the Gen Z consumer into the world of crypto. So before I even dive into this, what are your first thoughts on Mr. Beast and the BitMine kind of conglomerate here buying up a fintech like this?
I think it makes complete sense, right? If you can jump to have something that has, because like think about the spreading mechanism, right? If they did something that was completely brand new, it's a lot harder to get people to do something they've never done before, right? When they have an existing user base, not only can they get the people that they would have got anyways, but now they also have this spreading mechanism of the current users too, right? And so I think this makes sense. Like this makes total sense why they would do it. I also think that our general thesis that I discussed in the Substack that I did on this still reigns true. Like I'm very hard pressed to believe that this won't have some sort of major impact on finance. And it, like, honestly, if you think about this, sorry, I want you to give it back to you, but like at this point, Beast is now a conduit for whatever people are trying to like push forward, right? And so if he's doing all of these things, clearly people way above our pay grade want this to happen.
You could look at it that way. You could look at it that way. I mean, otherwise someone would stop him.
Right.
You know, they'd try to find a way to stop him.
That's it. That is the whole point. I want people to like actually think about what Keith just said. That's it. That is like the most important thing that was said almost this entire episode. That right there.
So let's dive into this a little bit because I thought this was a really good post. So this guy says, look, Mr. Beast just bought a $920 million fintech for what's almost certainly less than $200 million. And that's not even the interesting part. So point is that Beast Industries is valued at $5 billion, but this company Step raised a $500 million round and hit a $920 million valuation in 2021. But this was before there was a major downturn in fintech that created a lot of the neobanks a lot of their evaluation multiples across the board. And so now they have an app with 7 million users, an FDIC insurance through a bank, and a Visa card program already in production, right? He thinks that he probably just picked this up at a fire sale. So this is essentially what Ben was just saying. He kind of goes into the fact that like the distribution math of this is what's making sense. So Step spent a bunch of time basically paying $3 referral codes and cutting deals with these big influencers one by one at a time. And now they've got all of these people that are already on the platform. Now, the thing is that when you are in the banking world, like acquiring a customer is not an easy thing to do.
It's so hard to do.
So he points out that the CAC being the cost, the customer acquisition cost, it runs from $100 to $300 per user, which guys, in most businesses, that is an extremely prohibitive type of cost to acquire.
Yeah, you would not even be able to run most businesses.
But in finance, and especially when you're talking about a younger generation of people that they're trying to target, right, you have a much longer lifetime value that you can get from all of these customers. Plus, you can offer them an infinite amount of different types of products, hopefully, not a prediction market, but that is the level at which this could end up going to. So he makes the point that essentially, when you have someone like Mr. Beast with 600 million followers across all his platforms, he says your customer acquisition cost nearly drops to zero, right? Because all he has to do is upload a video, right, and talk about this, and now he's got hundreds of millions of people that are going to see this product.
And they will get some sort of free money, man. There'll be some sort of game. There'll be,
Good point. Good point. I mean, the airdrops, right? I guess is kind of what you're alluding to.
They'll put some sort of money in people's pockets, man. I'm telling you, they will, because that's his whole brand, man. It almost makes it feel like this was the whole thing.
Wow.
Right? Like, if you actually think about this, like, his very first thing that ever made him money was giving people money.
That's crazy to think about. That's crazy to think about, bro.
I think about this shit so often, bro. Like, I'm always like, how long were the games that were being played?
That's
right? Because
wild.
I think about this too, because like no creator can actually understand the impact they have. It's impossible, right? Like Joe Rogan, for a single person to understand the sway that he has, if he actually understood the significance, he wouldn't run a show. It'd probably be too much. It'd be so overwhelming, right? And so then that's how, like, if you're really playing a game, you create assets that don't realize they're assets, right? So I think a lot of these people that are assets have no clue, because you'd almost need them to do that, to keep doing the thing, right? So what do? You sell them on some sort of vision, right? Like, this is what we're doing. This is why we're working on this. And I'm full of shit here. I'm making stuff up out of thin air. Like, none of this is real. But these are definitely things that I think about quite a bit.
589 in the chat. Just got to say that real quick. 589.
589. But I definitely think about this stuff all the time. And we've reached a point where it's just such an effective medium now, where a lot of the attention has consolidated itself to one place. And that was pretty genius, right? Because if you convince that everyone has an opportunity, by the time that the majority of people actually even try, the game is over. And we've entered that part, right? Like, I've been growing YouTube channels for 8 years. And over the last year and a half with this AI push, it's become inordinately more difficult to grow a channel from zero. You're obviously an exception of that, but that's because you filled a gap, right? Like, you were something that was clearly needed and presenting it in a way that was also needed. So like, there are always exceptions to this, but it's a completely different game.
Yeah, and I think it's changing rapidly. It's just changing rapidly right now. I mean, I talked about this when I first got on YouTube. I was like, look, y'all, I need to start a YouTube channel, like, because this is not going to be like this forever. And the fact that there's such an imbalance right now is something that is a huge opportunity. But
dude, I've been yelling this for nearly a decade. Like, I was like, guys, this is like the first time in history where you get paid to grow your business. Like, I was like, guys, how are you not? Like, I'm like, every room I went into, right, where I was the social media guy, I was like, how is everyone's brain not falling out by the opportunity here? You know what I'm saying? I'm like, this is absurd. And so and if you want to see this, like, go to my YouTube channel. I've literally been saying the same shit for like 8 years. The same shit. Maybe I'm a plant. I don't know. But but like, it is such a massive opportunity. And eventually that's going to be taken away.
Yeah, I mean, huge distribution vehicles being built and getting paid to do it is just next level stuff.
It's absurd.
You had something?
No, you're good. Go for it.
So basically, he just, on this post, he finishes off to say that basically the chocolate bar, or the Feastables rather, proved the model already. You build a consumer product, attach Mr. Beast's distribution engine to it, and watch it become the most profitable business line in the entire company, more profitable than the YouTube channel and the Prime Video show combined, according to some leaked pitch docs. So Step is the same playbook applied to financial services, except instead of building it from zero, he's buying 7 million existing users and a licensed banking platform. The revenue ceiling per customer in financial services is 10 times higher than in chocolate bars. So then he goes on to talk about the BitMine partnership and how it's perfect timing, and now they're launching a fintech. And he also says, here's what no one's pricing in. Step users are 13 to 18-year-olds opening their first bank account. 88% of them say Step is their first. So Mr. Beast's core audience is the same demographic. Every user acquired here represents a first financial relationship, the one with the highest lifetime value in all of consumer finance, because you bank because the bank you open at 15 is the bank you might still be using at 30. And then, this is perfect because Chamath quoted a tweet: "We bought a bank for a reason. A $5 billion distribution company just acquired a regulated financial platform at a fair valuation." But then I saw this meme that was just perfect, where Inverse Kramer said, "Cannot think of anywhere more safe to put my money than a bank owned by Chamath and Mr. Beast." So Chamath gets ragged on all the time for basically the major thing that he did was in 2020 or whatever. He launched a SPAC and maybe even a series of SPACs, which are special purpose acquisition companies, which are kind of seen now as like kind of scammy things to do because you're raising money from the public to go out and basically do venture capital investing, which most
people
of
that don't have the money for that risk. Yeah,
exactly. So ever since then, he's kind of just been on the butt end of a lot of jokes around like, do I really want to trust Chamath with my money? So I thought that was perfect.
Is that why he switched to be Republican?
It might be a big part of it.
Because Republicans would naturally see that as like being entrepreneurial.
Doing the SPAC?
Yeah.
I mean, honestly, probably why he's because he was getting ragged on pretty bad. Like people have very much so attacked him for that even now, obviously.
Mm-hmm. Yeah, I actually described, because like I was freaking out about this last night to my girlfriend. I'm like, they did it. They freaking did it. And she's like, what do you mean? I'm like, they bought a kids bank. Like, and
that's crazy, man.
Obviously that's far oversimplified, but if you look at those numbers, I didn't even have to read that to know that was the case.
Yeah.
Like I already knew. And it's just insane to think about, like, what are these kids going to buy when they start using this thing? You think they're going to buy stocks? Come on.
What do you think they're going to buy? Cryptos?
Yes.
Cryptos, and please do not let them trade on prediction markets, bro. If he does that, then I'm calling him out. I'm calling him.
Yeah.
So look, Jimmy, don't do that to these kids, man.
And I've heard everyone who talks about Jimmy, they always say he's a really great guy. So he's probably a really nice person. But like he's got such an influence now that there's so many people who are now at the table that are part of these decisions.
True.
Which is just a different equation. And the unfortunate reality that he walked himself into with that stuff is that the kind of content he did made that inevitable. He needed so much money whenever he made content, right? Like why we'll never need to take on funding is because we can do this for like almost no money, right? Like our overhead doesn't need to be huge for the kind of content. So will we ever get the viewership he would? Obviously not, but we don't need to have people involved.
Yeah, I mean, there's that side to it, but there's also that who is he reaching, right? Like once you start reaching that kind of a scale, you're basically like what TV networks, Hollywood, who have they been infiltrated by, right? Like defense and intelligence.
Yeah, inevitably. Yeah, it was created by them sometimes.
You can't avoid that when you're at that scale. I mean, look, you can
totally,
but they're going to want a piece because of the influence.
William, that's a good point. Like Mr. Beast is like Elon Musk, but for kids. That's super accurate. Because if you even look, before Elon Musk got the mass amounts of love that he had and the hate that he had, he used to be thrown on sitcoms as like this tech genius, right? And for the younger generation, how is Mr. Beast seen? As this content genius. Right. And they both are those things, I think, right? But they're also very useful tools.
That's such an interesting thought that he's the Elon Musk for them. Because I remember when, I don't even know what years these were, but once Tesla just started going crazy, everybody just loved Elon Musk. He could do no wrong. And I mean, now, he's had some pushback in the past year or so. And in general, people are like, all right, this guy's not infallible. But that's such an interesting thing because he's also there at a time in their lives where, yeah, he could end up being that influential, if not as rich too. I mean, I think when it comes to this crypto stuff, he absolutely is in a position to potentially become that level of wealthy.
100%.
Yeah,
110%. But I do also, I feel like I do feel a positive shift coming. I'm hopeful of it, where people will understand what mindless consumption does to them. And I'm hopeful that like brain rot social media will be seen as like drinking is now. You know what I mean? How like drinking's been less and less and less of a thing. I'm very hopeful that brain rot will become more of that kind of thing, and people are more intentional about where they spend time, because wherever you are around or whatever you're around, it's what you become.
Yeah, it's such a weird time because there's just infinite ways to use your time now on the internet. It's actually something that messes with my head a lot. Like, I almost feel like there was one time last year where I sat down, I was like, how many books could I possibly read in my lifetime? Right? Because there's also unlimited books technically for you won't
Totally.
be able to read every book. I was like, dang, like I did the math. If I read 4 hours a day and like, which is a crazy amount, then I could read this many books. And I was like, I need to pick those books and like figure out what I'm going to read. And then when it comes to online content, like even just podcasts,
Yeah.
even
There's
just
so many.
long form,
There's so many.
there's so many things that you could consume. So definitely something to be conscious of at all times. I've got some more news, but what were you going to say?
There's just one that I saw from Nicholas that I think can put a bow on this topic, where he said, if he goes for kids' money, he's sick. The thing is here, Nicholas, he's not going for their money. He's going to make them money. And so then when that happens for the rest of their life, they like this, or at least until something bad happens. But like, I'm willing to confidently presume that they will make money. Right. And so, and then what does that mean? Like, they made money because it was manufactured, but at the end of the day, the numbers are still in their account. So it's like, yeah.
That's a very good thought. Very real. Someone said he's going for their attention span anyway.
Yeah, he's already got it.
Yeah. Like,
but I will say, like we've talked about this before, man, we really need to push the message of how bad doom scrolling is, dude. Because it's become this little thing where people are like, I was doom scrolling for an hour. Like, it's not killing themselves. Do you know what I'm saying? Like,
yeah.
At Christmas, I was going ham. I was spitting bars on like all this stuff because people started asking me questions. And everyone's like, how do you know all this shit? And I just said to them, I said, show me your phone. I probably have more screen time than you, but look where I'm watching. That's the only difference. Right? And they were like bragging about like they love their doom scrolling. They're like, I can't get out of bed until I've doom scrolled for an hour. And they're all joking about this, right? And anybody, if you guys find this, I love all you guys. I'm saying this because I do love you. That's why at the time I was like, even at the table, I'm like, yo, this is crazy. Like you're basically bragging about doing crack.
Yeah. And I was listening to the psychology lecture yesterday, actually, and I started to kind of get a glimpse of like, why do we do these things? And it could be any behavior. This actually wasn't necessarily about doom scrolling at all, but it directly applies. And the thing that we're addicted to is not necessarily just the content or Instagram. We're addicted to being stimulated.
Totally.
And so when we don't allow ourselves, you have to consciously choose to not stimulate yourself. And like, that's a really hard thing to do if you don't know that that's what's happening. But yeah.
Almost all the value of education comes from the necessary time and discomfort to reflect on what you just absorbed, to then apply it in a way that makes sense for you. And so when you've removed that practice from human existence, there's a reason why we have mindless drones everywhere, right? And so it's not even people's faults. Like when I talk to people who are under the age of like 24, they even like sound the same, dude. It's crazy because they all grew up on like the same sort of media, and their tonality is very, very similar, the things that they're concerned with. And because every moment where there could have been that opportunity for self-reflection, it's almost always going to be uncomfortable. So if I can pull out my pacifier, I'm going to do it every time, unless there's a repercussion to this. Or like when I was a kid, I used to stay up all night running through the day and being like, why did everyone do what they did? And everything that I have here, everything I can talk about, it's because I've done that for my whole life. These kids have never done that ever.
I lost you for a second.
Am I still here? I was gonna say, these kids have never done that. They've literally never done that. So they don't even know how, right? Like, and the thing is too, is that with how atrophied their critical thinking skills are, or maybe they just never got developed, for them to have a job, they need AI.
True.
They actually don't know. Like, I've done this. I've employed people that are very young. I've done this with my sister. I'm like, dude, everything in life is like problem solution, right? So you're seeing the problem, you're identifying it, and then you're reverse engineering the desired outcome. It's the same process. Like almost every skill is just doing that again and again and again and again. But they don't even know where to start, dude.
I hear it, man.
It makes me so sad, man. It makes me so sad. But we're not without hope. I think that's the most important thing, is that self-education is such a valuable resource. But I think so many people are down so bad that they don't, unless they were to experience something like massive, they won't believe when you or I were to say this, right? Because I visualized this thing I'm going to share on my socials pretty soon, where life and like money, everyone thinks that it goes up like, what's the proper word? Linearly, like where it's like a slight decline or incline, sorry. When in life, almost everything is an exponential, right? Like you people who want to walk into a job and like gradually make more money because they can conceptually get that. Almost everyone who became really wealthy, they were dramatically underpaid for years. I can say that personally. I've been getting ripped off for the last 8 years of my life. I know that because I was the only one who understood the fair market value for what I was providing. But I think we're at this point now where it might go like this. And it's really hard for people to sign up for that because there's not enough people explaining this, right? Like,
Yeah.
Like when you go on a podcast and you hear the guy at the end of it, he's so far removed from everyone listening. Why we have an opportunity, Keith, is because we're the same as people listening to this. We're no better. We have a very similar existence, right? And that's very important that like, everyone shares this message. Like if you're watching this and like you're taking stuff from it, bring it to people you know, right? Because you won't know, you'll know them way better than we would. So our message may not hit with them at all, but you may know them way better to deliver that.
Yeah, that exponential thing, right? Our brains aren't wired to be able to interpret exponential change at all. So it is something that has to be kind of taught and really shown, even and demonstrated. Because if you don't experience it, then your brain doesn't naturally understand it. So at the very minimum, obviously you can sit down in a classroom and teach people this stuff, but this obviously directly applies to finance and money, right? Compound interest. A lot of life looks like that.
Yes.
Einstein called it whatever, the eighth wonder of the world, because it applies to everything too. Right? Is the other thing is this isn't just a financial principle there. But anyways, anything you see in the chat that you want to bring up before I do this next couple news stories?
No, one, because like we're saying all this stuff and it's fairly vague. So like, what can people apply? I think some books are a very good idea. And Tony Robbins, I think, is a fantastic name that I've seen brought up in the chat. And the thing that's funny, and pay attention to this in life, right, is that everyone who calls him like a scammer, like they probably not even read his books. But then all the people who have read his books and applied what he said, they love him. So it's one of those things where it's like, just because you can see people who are saying something to the contrary of like what the person is pushing out there, people are going to view it based on their current situation. And so if they weren't willing to do the things that then led to the outcome, they'll just say it didn't work. Do you know what I'm saying?
Yep, 100%. And yeah, if you guys are new here, definitely like and subscribe and turn on that notification bell because you'll only get notified when we go live.
Fantastic point.
And I know some of y'all are new. So let me move quickly here into a couple of news stories. So Japan's prime minister was just elected, I believe, over the weekend. And as that happened, we actually had the Nikkei index actually go pretty high up during that time frame. So we had a huge surge on Friday up to 62,000 from down here at around 57,000. So almost a 10% push up in the stock market, all just in one day for Japan. The Nikkei index is the Japanese index, 225 of their largest companies. We had also pretty recently, I think it was over the weekend as well, Trump basically saying that the Dow Jones is going to hit 100,000 by the end of his term, and claims that he was right about everything. I thought, that stuff is hilarious. But he also had this conversation that came out yesterday with Fox News, where he was talking about how he regretted the Fed pick that he made, but I think this was being a little bit misinterpreted. I brought it up on our socials, but I wanted to run through it really quickly here. So let's really quickly, here's what he said.
When did you, in your heart and mind, when did you know you wanted to get an abortion?
So
Officially, it was 2 Fridays ago. But when
Well, I made a mistake. He was runner-up, if you want to say that.
He was a finalist.
Yeah, he was. And I made a mistake because I had somebody that was my Secretary of the Treasury, wanted him so badly. And, you know, I didn't feel good about him. But sometimes you listen to people, and it was a mistake. It was really a big mistake. But I think we're going to do something that's really spectacular. We should be at 15%. I'll tell you, if our new head of the Fed, who I think is going to be great, and he's a really high-quality person, but if he does the job that he's capable, we can grow at 15%. I think more than that.
So I wanted to talk about this because people were taking this and going way out of proportion about what he said, how he regrets Kevin Warsh, but that's not what happened. What happened was that he was talking about Kevin Warsh in his first term when he was appointing Chairman Powell, was who he ended up appointing. So he was actually talking about how he regretted picking Powell. Okay, so this was running rampant on social media. I just wanted to address it because the thing is that Fox, right? They put out this video and just said President Trump admits I made a mistake about this.
Yeah,
Like,
that's such BS, dude.
Like kind of crazy. I'm like, oh, you sound like a YouTube. Like you kind of know how to play YouTube.
They're clickbaiting, yeah. And I guess everyone already knows that that's what they are, so that's probably fine for them.
But yeah, I mean, for mainstream, that's pretty intense because I mean, at that point, they had to have done it intentionally. You know what I mean?
Without a doubt, because then you're getting the rights and the left.
Yeah,
right. Because you're like, whoa, Trump said he made a mistake. Right. So, like in terms of packaging psychology, that person objectively, I don't like that they did it, but they did a good job.
Yeah, that's true. That's so true. I'm surprised it doesn't have way more views, honestly.
It'll go over 1 million.
Yeah, because that's a pretty good one. And from that perspective, I didn't even think about it like that. So anyways, that was worth pointing out because, you know, big news media outlets taking things to a whole nother level. Another thing that I saw, this is actually kind of older. It's from January 5th, but Ed Elson from the Prof G podcast, he put out an article about the company of 2025. And essentially he compared it to, it wasn't OpenAI, it wasn't NVIDIA, but instead it was OnlyFans. And the reason that he said that this was the #1 company was just because of the level of growth that they had. They made like $7.5 billion in revenue or whatever. And the thing that I took away from that article that I thought was the most interesting was that 70% of their revenue actually comes from their chats.
Without a doubt.
So the whole point of the article here is that they don't sell just what Playboy magazine sold.
No, it's the connection.
They're selling connection and solving the loneliness problem. We're not solving it, but they're addressing it and monetizing it at the very least. So I just thought that was really worth pointing out because obviously we're seeing huge levels of loneliness across the board. He goes through some stats in there about people in their intimate lives, as well as how much time people are spending alone.
Mm-hmm. Yes.
So
business lesson there, guys, is when you're thinking about your ideas for businesses, what adjacent, seemingly unrelated problems can you actually solve? I guarantee you, when they made that business, that was the sole end destination. But you have to start by solving one problem people believe you can solve. It's obvious. You get them in the door, then you solve the actual problem.
Love it.
Yeah,
how to scheme like OnlyFans.
It's messed up. I don't like it. Exploiting the loneliness problem is definitely super messed up. I am creating some products that I hope to try to solve that in a positive way, because you can do both. That's much like we talked about this conversation. It's easier to do the OnlyFans thing. It's easier, but it doesn't mean it's the only option. Like you can solve that problem in a more positive way. And I also think there's been so much crap that we all know is horrible for us that I think like good ideas that are also good for the users will start to gain traction. And I'm very hopeful for that. And hopefully we can all rise like good things to the top and be honest about what we're doing when we're doing things. And yeah, and also like, yeah, it makes me pretty sick about that whole thing in general. Cause I also know people who are OnlyFans people, and I've heard them like brag about the fact that they make almost all their money from the chat, and it's not even them chatting. Like they'll hire guys from overseas or use AI. It's so predatory. Like to think that someone's doing that and like laughing about it, I'm like, we've lost the plot.
Yeah, so that was another big thing he said in the article. It's like, well, most of the time, there's way too much capacity, right, for these people to actually be responding to them. So they're actually talking to a man somewhere.
Yes. Yeah.
So a couple other things. Yesterday we had someone ring the bell. It was Sydney Sweeney.
Okay.
And it was just, a little cultural moment that occurred. And then someone made a little tweet saying, Happy Monday. Everyone said thanks to Sydney Sweeney because it was the first green day that we've had in a couple days. And what was the other thing I saw? Oh, and there's just also something interesting about the fact that her name, both of them, have NYSE in them. I just thought that was interesting. She does have NYSE in both of her names. But another tweet or meme that I thought was really good. We're moving into memes, by the way. I'm moving to memes. So last week we had the whole like Anthropic ads coming out and like Altman responding to them and whatnot. And so this guy,
that's great.
Anthropic's ads were not a threat, but also Sam Altman sending a massive paragraph about how this isn't exactly how their ads are working. So that one was perfect. That was really good.
So
Couldn't
good.
let that slip away. Someone else talked about the Bitcoin halving. I thought this was a good point. He said, is this the great Bitcoin halving that everyone was talking about? From 120 down to 60. Good point. Let's see. And then this one was a little bit niche. The last thing that the Fed sees before it implodes. And this is Scott Bessent with Judy Shelton, who I know a lot of you people are familiar with, who's not necessarily called for the ending of the Fed, but for some major reforms in the Fed, and is a huge proponent, well, not proponent, but a huge figure in the XRP space. Let's see, one more. This one was, mild funny. He said, you've met me at a rather illiquid period of my life.
That's awesome.
And I was like, yeah, that's how it feels. And that's almost always how it feels being a crypto investor. This one was interesting too. It said, we used to hunt the bug down in the code base with our bare eyes, referring to all of the AI coding that is happening now and how we're all going to be dinosaurs for ever having to have even thought about actually trying to figure out the bug, right? Like going to sleep, waking up, like, okay, now I can look at the code base again. And like,
that was most of programming, man. And people take for granted that the internet is where it is now. When people were programming earlier in the day, like they either had to figure this stuff out, and then someone made this forum. I forget what it's called. Someone in the chat can definitely help me out with
Stack Overflow.
Yes.
Yeah.
Where people would go and solve their problems because, and you also have to think that people who can still always maintain the structural understanding of building systems through code, like that's going to become incredibly valuable because, and I don't think it's going to go away very soon. And there's this guy that I actually love. If you guys are like over the whole AI talk a little bit, there's this one dude who I love his stuff. He's like the only person who I've seen who's not going like crazy on AI. I think he might be too far the other way. Like it's saying it's no big deal kind of thing. And I'm not quoting him. That's wrong in what I'm saying. But he basically was saying, and then he made the point first. And then I saw Prof G make the same point where he said, with the domination that was experienced from the amount of AI or AI related companies that had ads in the Super Bowl, that is very similar to right before the .com burst. This guy took it. This guy deserves credit because he said it before Prof G. I'll try to find him, but AI.
I did see that.
To pop stocks. This guy's awesome. I'm trying to find his channel for you guys. Because he tries to teach coding as it was taught before. And so I think he's even got like an online school now. So I'll try to find his stuff, but feel free to.
Oof. I wonder what you're talking about because I feel like I've seen some of that guy.
I've sent you his stuff before.
Okay. And he talks about like the mainstream stuff that's kind of going on as well as how it relates.
So here's the guy.
Yeah, he's super cool.
He's cool, man. He's just like, much like we talked about before, he's just kind of the opposite of everything that's on YouTube. So he's standing out quite a bit because of that. So let me try to share this tab right here.
Oh,
I got it. I think.
Okay.
Can you all see this?
Yes, sir. Oh, okay, this guy.
Yeah. So the Internet of Bugs is his channel where he covers more of the macro subject. In this video, he talked about this a few days ago, and then I heard Prof G say it like yesterday. But again, we all come to these things. And then he also has he has like a school kind of thing where because a lot of people are like, oh, there's no point in getting into engineering, where it may end up being a very good time looking back at it, right? Because we're at this weird transitionary period where all the big companies, yes, they're shutting down, but they're not talking about the millions of small team companies that are being created that still need talent. Right. So we're at this weird point right now where it's like, it actually might become like good to know this stuff to either build something for yourself or there may be more jobs just in a very different way. So
Very good point.
His channel is the Internet of Bugs. He's awesome. If you want like a counterweight to the AI hype, definitely go show him some love.
Yeah, he'll bring you back down to earth. So this one right here, final meme of the day. I saw this one. Uber driver in SF, San Francisco, asked what I do. Said I'm building a startup. He said, "What's your MRR?" And he said, "The city's cooked." So MRR is monthly recurring revenue for anyone who is not familiar. And basically, it's just like saying that we're at the point where even the Uber driver is like building a startup or working on something or is in the industry, in the scene, which I'm sure it's been like that in San Francisco for a very long time, to be fair. Like
Totally. Yeah.
But anyways, so what else we got today? I mean, for me, I got nothing.
Michael's got a comment here that I would
do
love to
have some
touch.
things. Yeah.
I'll say this quickly. So scary thought, but what if all of this crypto is to push CBDC oversight and the ability to turn off our accounts? So like, I think he's relating to AI, but I said that last episode where it's like AI is becoming the perfect crypto adoption mechanism because there's so much fear.
Yeah, well, no, I mean, that's taking that to the next level of like what actually ushers in the CBDC itself, right? The AI, I think you've made a really good point around how that could go down.
And what if they've been doing this the whole time, right? Like what if the AI has been in existence for a very long time and it knew people enough to understand that this would have to be the path of events, right? I'd have to scare the shit out of you. I'd have to make you think that I'm taking over the world so that you'll actually look at this technology.
There's definitely some like weird time travel-y things that have to come into play when you think about it. And when you think about AI existing at all, right? Because it's
very true.
Like, what if it always knew? What if there was always an AI somewhere, right? That's pushing us into this world. So yeah, I don't know. There's some interesting things to think about with that for sure.
Definitely. What do you have next?
So one of the things that we've been meaning to do here is to go back when you guys leave meaningful comments and talk about them a little bit. So there was some meaningful comments that we had on the last episode that I wanted to bring up. Ben, did you have anything else that you wanted to talk about before that?
No, but it's all you. Go for it.
Okay. So last episode we had Abs from Good Evening Crypto. It was a really good episode.
Yeah, it was awesome.
We had some good comments I wanted to point out. So one of them, obviously just some love that we get from guys, and we always appreciate that. Lord Kin said, 3 wise men beyond your years, keep pushing your internal I am statements. Wasn't expecting the spiritual insight. Been preaching this for years. So yeah, thanks for that one. We always like to bring things to just like, the real level of like what it is that's really going on or what's on our minds. So we appreciate you pointing that out. And then Horsehog said something that I thought was kind of funny. He said, oh, where did that go? Oh, I gotta load him. He said, I know this is a positive comment, but I love the show. I'll even it out with saying you're a bunch of sheep. LMAO.
Look at what I said back.
And then Ben called him a legend. Because essentially we were talking about, how people are always being negative online. And he took that and did that one. And then Terry, shout out to Terry, because I think Terry is a first-time watcher of the show.
What up, Terry?
Terry, if I can find it, totally engrossed by this conversation. This is my first time really checking out your show. I'm honestly just blown away by the energy, honesty, and fresh perspective. Appreciate you both, and your guest is excellent. Welcome through. And that actually brings me to the QAZ, who said same, first-time listener, and it might be my new favorite podcast.
That's big. That's high praise. And we take that very, very seriously. So we really appreciate that because we know there's so many options out there.
Yeah, so they made their own independent comment, first-time listener. I think this is already my new favorite podcast. And what I would say is hold it. Okay, hold that. All right, come through for a few episodes, get involved, see how you feel. All right, and then let us know if we're really anywhere near that level.
Yeah.
I know things can change in an instant, and so we don't want
it might have just been one good episode.
Yeah.
Totally fair. Totally fair. I also, if y'all are here and you just found us recently, I strongly recommend going through our back catalog of content. There is some awesome stuff there that hasn't been pushed to the algo yet because we weren't big. Like we didn't have a following. And so there's some amazing videos that I know later will pop, and it's definitely worth consuming them now.
100%, man. I'm just not thinking now. We've been talking about different like formats, and like one of them could easily be the second half, right? Every time, because some people might really enjoy that.
Oh, yeah, no, 110%.
So Sean Andrews said retail investors are dropping the bucket for XRP. XRP is built for institutions. However, retail can profit the same, if not more, from XRP as retail has front-run institutions. Look at the moves Ripple has made and continues to make. They have signed agreements with major institutions all over the world. Institutional onboarding is what drives the price for XRP. I say onboarding because institutions have already adopted. They're just waiting to onboard. I'm not sure what I actually wanted to say to that. Maybe that wasn't the one. Oh, it wasn't that one. Sorry. I'm like, why did I like, what was I going to say to that? Okay. He made another comment. Okay. He said the word decentralized is the most overused word in the crypto narrative. People think it means freedom and other versions of power. The power is distributed, but it is still under control. In fact, a distributed system allows power to scale and be more efficient. What people believed in Bitcoin was a lie. They believed they had freedom outside of the mainstream monetary system. They didn't. You can't trace bank transactions. You can trace bank. Oh my goodness. You can trace back transactions on the Bitcoin ledger to their existence. Has anyone think governments are able to seize for nefarious activities? How does anyone think that governments can seize Bitcoin? Do you think the NSA would build software that didn't have ways to trace every single transaction? Everything is traceable. So the point of this that I think is worth doubling down on is this concept of the difference between decentralization and distribution. And this is one of my favorite topics in crypto because I think a lot of people who are Bitcoin maximalists, who, by the way, usually come in without knowing anything about how this technology works, they miss. Because decentralization is not necessarily the most powerful thing that comes from crypto. It can be in it. And if you're in Bitcoin, then obviously that's your answer, is that you want to decentralize power. But for things like the XRP ledger and other things as well, it's not just about having decentralization. It's also about being able to distribute things. It's also about having resilience of the system, right? So decentralization can help with the resilience of the system, but that doesn't mean that I want it to be to where there's no one who can even control anything about it or whatever. There might still need to be things that can be blocked or rolled back on the network without having full, complete decentralization. So anyways, a couple other comments that I wanted to point out. Anything that you want to say on that, Ben? No,
I think that's really important to bring up because there's so many things that people latch on to whatever story they currently understand. And then they're missing a lot of the things that are close to it, which is also why I'm really excited to have Jeff Booth on here pretty soon, because he talks about how he thinks Bitcoin is at a place where it can be everything.
Right.
So like, I'm very curious, even from my own educational perspective, because maybe I'm just ignorant to a lot of things. I want to see what I'm missing too.
100%. I'm super stoked for that.
Yeah, I'm so amped for that.
This other comment, he said, Jake62593 said, AI is just a statistical model. The only reason it has gotten so sophisticated is because the models have been trained on huge amounts of data. No evidence for sentience that I can see. The output is full of inconsistencies that are easily spotted by actual human intelligence. Also, the growth of AI is limited by the fact that it consumes huge amounts of energy, water, and computing hardware, all of which are finite resources. So I disagree when the guest says there are no limits to how far AI can progress. The limits are inherent in the fact that it's just a statistical model and that it is environmentally unsustainable.
Very fair point. It's also what I think will cause the crash, right? Or the pop.
And I would also say that that's how we're looking at it right now. But as it gets more intelligent and more efficient with the resources that it does have, you could absolutely change and flip everything around that like finiteness of what you're saying. I think that's the whole point of intelligence, is that it's not finite. There is an infinite intelligence that has gotten us all here, but that's my own thing that I guess I'm going to say.
No, I agree.
But it's like, you know, the closer that these things get to that form of intelligence, then shoot, the environmental problem might go away.
Yeah, we'll see, right? We're projecting and predicting so much that it's impossible to do. And so almost everyone will be wrong. Like every single person will be wrong because it's so hard to predict. There's so many things at play here. But one thing I do want to mention that's kind of more on the meme side is that, like, we talked about this before about how much of their training data is like probably illegally obtained, or in the future will be seen as illegally obtained when people actually realize what they're training on and everything like that. But also, people don't realize how much they're providing training data through like deliberate features. So, for example, when Instagram has the add yours sticker, you think they're not doing that for specific training data purposes? Like, come on, when they say show me at 7 years old, right? They now just got millions of people at 7 years old, and then they can now compare that with your most recent post
or that,
or like whatever, like how old they look now. And now they're training the data of like, this is the growth of this person. Like my buddies were doing one of the latest trends, right? And again, like I've done an add yours before too, because I already know this is happening. But like my buddies were doing it in the group chat, and then at the end of it, one of them realized it was like, "Oh, do you think we're doing this like because they want us to?" And I was like, I didn't talk through it the whole time because I'm like, let them have fun, right? And then at the end, I'm like, yes, dudes, come on.
That's wild to think about for sure. Dang.
Yeah, man. Well, do y'all have anything else? This has been a long one, but it's been fantastic. I want to say that we appreciate all of you guys being in here so much. I did see a question about the NFT project. So we're actually going to be talking about that a lot more at length on Thursday's episode. So if you want to hear more about that, feel free to come back. The link to sign up for the waitlist is in the description box down below, just for you'll be notified when we do decide to mint it. Again, keep in mind with that, there's no guarantee with that of anything. Imagine you're buying a digital collectible when we launch that. You're not buying anything that's going to make you money. You're buying a collectible. And so if that's something you want to sign up for, you can do so using the description box down below. It just says NFT waitlist. Go give the email that you want to be notified on. And yeah, what else do you have from Keith?
Super excited to chat about that on Thursday. But for me,
Spotify?
I think there's nothing else. Spotify is a massive thing, guys. Spotify is this platform where you can listen to music, you can listen to podcasts, you can almost communicate with your friends, but I think that's something that they're really missing. Yeah. I did realize there was one feature my friend they sent me to the other day. It was like, you can create a joint playlist where it will like put your most liked songs together. So you can share that with each other. I was like, okay, well, that's a step closer. You know? But we are also on Spotify as a podcast, and we could really use your help with getting reviews. So if you could do us the hugest favor of leaving us a 5-star review over there on Spotify, it actually makes a huge difference in the visibility of the platform, which will also help us to get better guests. It will improve all the conversations that we continue to have here with you guys. So we really appreciate you taking the time to do that.
Yes, 100%. That means so much to us. If you guys can go, maybe pick an older episode that you want to watch anyways, watch it there, and then give us a 5-star rating if you could. My goal for the month of February is to get that thing to 100. So if you could definitely help us with that, it would mean so much to me. But what's up?
I just saw someone, they pointed out an artist, and I was like, wait, where did that come into the conversation?
They see it on yours?
I guess I showed you guys what I'm listening to.
Fair. I also want to, like, maybe that'll be a Patreon thing, but I do want to hear what other people are listening to as well, like the music they're into, and where we can talk about that stuff too.
Yeah, that'd be cool. I mean, that's what Matthew said. He said he wants to see what we listen to. He said we should see a Keith Bin blend on Spotify. So
that'd be cool.
Yeah.
I'm down. I'm hella down.
Most definitely, man. Yep. Appreciate everybody for being here. If you haven't already, you gotta hit that like button. And if you did that, it'd be really easy to also subscribe. And in fact, it would make sense if you liked it. So
complete sense. Yeah. And turn on the notifications. You'll only ever be notified when we do go live. We have separated all of our other content to safeguard your notifications so they actually mean something. So definitely take advantage of the notifications. We'd love to have you here to contribute to the chat and all of that good stuff. We've got some unreal guests lined up. A guest coming on next Tuesday was on my dream guests list for the year. So
probably, okay, maybe not number one, but I mean, basically number one on Ben's guest list, or his dream list.
He was definitely up there, man. We got to start going after your list, man. I want to start getting some of those people on for sure. And also, we definitely want to have more girls on the show too. Yes. If you guys have any, because we haven't had any. I want to have girls on here. So just if there's anyone you want to see in particular, definitely let us know. I've sent a lot of DMs to girls, but I'm sure they get so inundated with like guys' DMs, they probably don't look.
True. What a thought. What a thought. Like, what would make your DM stand out? Out of all these different guys that are DMing.
Yeah, exactly, right? So I've reached out to 4 women trying to get them on, and I've not heard back. So I'll definitely continue to try. But if you guys have anyone in mind, definitely let us know.
Yeah, because I saw, Johannes, you had asked actually if you could, and you actually gave us Catherine Austin Fitz in that list that you also just gave. And yes, she would be an awesome guest, and I think she would like our show too. So yeah, you guys always feel free to give suggestions for guests. We're always looking for cool people to talk to, and some of you guys have mentioned people that I hadn't heard of before that are doing cool stuff. So absolutely,
she's awesome. She's freaking awesome. Yeah, she's sweet. But yeah, if you guys have anybody in mind, definitely please let us know, and we'll do our best. If they create content, if you could help us out by commenting on their stuff, saying to come on Memes and Markets, that'll definitely help us out. Because like Keith said, it's definitely hard to get a hold of people. But we would love to have on more girls on the show for sure.
Yeah, Camilla Stevenson is a good one too. I think she'd be a good episode, and she's a big XRP person. And yeah, Jordy Visser. So yeah, Cross Central. I saw you give the credit to Jordy Visser. I'm just now starting to follow his stuff as well.
Yeah, Jordy's great. He goes on Pomp stuff a lot, right?
Word.
Yeah, he's Pomp's main guy. He's on there all the time. I've reached out to Jordy as well. So Jordy, if you're seeing this, check your Twitter DMs.
Somebody clip it and send it to him.
Yeah, and come on the show. But yeah, he's a lot of fun to watch. Very smart dude, clearly, and also very great macro. Like he's one of the best people that I think can like find the dots, like connect the dots. Sorry, like across so many different things. So yeah, he's definitely a good watch.
Love it, man.
Cool. Well, we appreciate all you guys. Yeah, Professor Jiang is somebody I want for sure.
Oh yeah, of course, guys.
Yeah, I probably would have put him on my list, but I just, he just missed it. But I would love to have him on. I watched every one of his lectures, and yeah, I think that would be a freaking fun episode, man.
Oh, no doubt. But he's really approachable too. Like
he takes
try to like,
you can say whatever. Yeah, like you can say whatever. Go ahead.
Yeah, he'll talk about stuff for real.
Yeah, it's awesome. I've been seeing him go on a lot smaller shows. I don't think it's impossible. I just haven't found the way in.
Fair.
There's someone I reached out to before because a lot of people have popped up making clips of his. And so I started reaching out to all the clips channels being like, do you guys know him? Because he's obviously not copywriting you. So you probably have some sort of interaction with him. And a few of them said that they would, but they wouldn't give me his contact. They're like, I'll relay the message. And I'm like, okay, whatever. But yeah, we'd love to have him on too.
Farina, yeah, those are good ones. Yep.
Cool. Well, we appreciate all of you guys. Hope you have a fantastic week until we see y'all again on Thursday. Make sure to have the notifications on so you can jump in right at 12 p.m. if possible. And we look forward to talking with all of y'all soon.
We'll see you on Thursday. Thanks for stopping in.
Thanks, guys. We'll see you later. Have a wonderful, wonderful day. Let me play the outro. Play. Why won't you play? There we go. Bye, guys.